A veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, you know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company, and that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW!
Some examples. These tag team partners are called baby faces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves.
Our world is changing. Every day, it changes a little faster. Some changes are too small to see. Others, too big to handle. Sometimes, change feels slow. So slow, we don't even notice. Other times, it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, there is a whole world of difference. The clock is ticking. This is Bloomberg Green.
Saving the seas. This week, the deep-sea diver who stopped writing the ocean's obituary to find a solution. Enric Sala tells us why the next 10 years matter most. And globalization needs to get greener. Shipping accounts for nearly an eighth of all transport emissions. How can the industry clean up its act? Plus, protecting coastlines comes at a huge environmental cost. But one Israeli startup found a way to keep the sea out and the animals in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what they used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to this island, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And three, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. is governments that have the legal authority to create large marine reserves in the ocean. But also, local communities have an important role to play because some of the most successful protected areas in the ocean are community-led and community-managed marine reserves. So when the fish come back, the divers come in. And that creates huge economic opportunities through ecotourism. These areas that are managed by communities are very successful because the communities have a vested interest in having as many fish as possible inside them so they can enjoy the benefits.
What from the pandemic has changed your view when it comes to protection of the environment?
Nature has given us a very strong signal of how fast it can recover if we just give it space. Everybody was fascinated by all these videos of the whales and the dolphins coming into marinas and mountain lions on the streets of Santiago in Chile, wild goats in the UK. Nature has this extraordinary ability to bounce back if we just give it space. This is why we need to protect at least 30% of the planet by 2030.
How do healthy marine ecosystems help in the fight against climate change, though?
Most people see the ocean as a victim of climate change, but the ocean can also be a solution because we know that the more life that is in the ocean, like big fish and big whales, the more these organisms help to make the ocean productive and absorb more CO2. The kelp forest, seagrass beds, all of these are important ecosystems in the ocean that are similar to the forests on the land that capture a lot of our carbon pollutions.
What are you most excited about in your field?
We have 10 years to fix this problem. Global fisheries catch is going down, stocks are collapsing. Business as usual means that by 2050, 90% of the coral reefs are gone, that most commercial fisheries have collapsed. That affects food security, that affects migration of people. We have 10 years to get to peak greenhouse gas emissions and then go carbon neutral by 2050. And we have 10 years to protect at least 30% of the ocean so we can restore much of this health and productivity, not just for saving biodiversity, but also saving our life support system. We are not talking about something that is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission: track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030.
11 of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future in coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
one of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast, and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions, an equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at a regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, E-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Indeed. TGIF, everyone. It is Friday, January 8th. I was going to say 28th because it feels like it should be. Carol. January 28th, but it's January 8th, 2021. Carol Masser along with Tim Stenovic, right? I mean...
Yeah, look, I'm going to go ahead and do a dad joke. This is like what my dad does. What a month this week has been.
I know. What's it from 30 Rock? Yeah. Lemon, it's only Tuesday.
Yeah.
What a week it's been. Listen, we got a lot to do. Jobs day disappointment. The S&P, though, did hit an intraday record high, although we're off those levels. First 7 most read stories on the Bloomberg has to do with the current president, the upcoming president, and everything in between.
It shows what people want to know.
Yep, it's all about politics. All right, we're going to cover that, folks, over the next few hours. Let's get you going, though, on this TGIF with a check on that trading day. Hey, Charlie Pellet.
Well, hello there in TGIF indeed, and what a week it's been, but the two of you made it. We're looking at a mixed Friday here. Let's get right to the numbers. We'll give you the why in just a moment here. NASDAQ now up 39 points, up 0.3%. What a volatile session it has been. The S&P is down 5 now, giving up earlier gains, retreating from a record, down 0.1%. The Dow is down 159, a drop there of 0.5%. 10-year yield 1.1%. So stocks falling from records after a news report that West Virginia Senator Joe Manchin will oppose further direct aid payments. denting hopes for another sweeping spending bill. Gold plunging 4%, down $75 the ounce to $18.38, and crude West Texas Intermediate rallying 2%, up $1.04 a barrel, $51.87 right now on WTI. So again, recapping here, S&P lower, down 5, a drop there of 0.1%. I'm Charlie Pellet, and that's your Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. As you know, Carol Master along with Tim Stanovic in our Bloomberg Interactive Brokers studio do want to set the Business Week agenda. A lot going on, but we've got to get to what was certainly our top story at 8:30 a.m. Eastern Wall Street time. Carl Riccadonna is with us, Chief U.S. Economist at Bloomberg Economics. So great to have you back on the phone from New Jersey. Dave Wilson, Stocks Editor at Bloomberg News on the remote access from New Jersey. Always good to have Dave as well. Carl Riccadonna, first of all, I am so delighted to have you here. Jobs report, it's a bit of a bummer.
Well, Happy New Year, Carol.
Happy New Year.
You too, Tim. The jobs report was a bit of a bummer. It was weaker than consensus expectations, even a little bit weaker than our below consensus forecast. However, there was a real silver lining here. There's really two silver linings. So one is we know...
This is why I love you. You find those silver linings no matter what. But go ahead.
Optimism on a gray, chilly January day. I mean, that's just what we need going into the weekend. But first of all, we can see that the pace of hiring has steadily decelerated over the last 7 or 8 months. That whopping surge after the lockdown was initially eased back in May and June has finally come to its conclusion, and the return of stringency measures has basically stifled the pace of job creation. That's the bad news. But the good news, as we look into the details of the report, is that this was really concentrated weakness in categories that are very obviously going to be impacted by these lockdown measures, like employment at bars and restaurants, hotels, leisure, those types of activities. When we look through the other components of the report, we see, first of all, a good sector that is doing quite well, whether it's construction or manufacturing. We can also see that core pockets of the service sector, things like financial activities and business services and whatnot, those categories continue to create jobs. So it shows that businesses have evolved and adapted to the new normal, which is working from home and social distancing and whatnot. And a very significant swath of the economy continues to operate pretty well, in fact. And we saw that in the ISM surveys earlier this week. That provides corroborating evidence. But without a doubt, there is some very severe pain in certain corners of the economy. But there definitely is a silver lining in today's report, and we see that reflected in financial markets, whether it's Treasury yields or equities today.
Well, Carl, isn't part of the concern too that the folks who are being most affected by this, and we talk about this K-shaped recovery all the time, although people who can work from home, that has bounced back to a certain extent, it's those service industry workers who are getting hit the hardest.
Without a doubt, that's true. And the good news, and part of the reason why financial markets can look through what will likely be short-term weakness, is that we do already know that help is on the way in terms of stimulus payments. The last stimulus round was about $900 billion, and we'll probably have an additional round now that Democrats control both the White House and both houses of the legislature. So we're talking about, potentially $800 billion of additional stimulus puts us to a 5 handle on GDP growth for 2021.
And I just want to say our Vince Signorella sending around a note to us earlier saying that the reason we saw the markets take a leg down is that Democratic Senator Joe Manchin saying that he would, quote, absolutely not support a new round of stimulus checks. And this was coming from the Washington Post. Dave Wilson, we haven't forgotten you. Equity markets looking a little bit different from earlier this morning.
A little bit different, but one thing hasn't changed. Even with the jobs report, the best performer of the 11 main industry groups in the S&P 500.
You need, what is it?
Discretionary.
I was giving you a drum roll, Dave.
Retailers and automakers and home builders, and you look at the jobs numbers and you say, huh? But then you go in and you look at the components of the index. Right now, the S&P 500 Consumer Discretionary Index is up 13.5 points. 12.5 of that is Tesla.
Wow.
Perspective.
Shares are up for the 11th straight day, which, if the gain holds, would be a record-setting rally for this stock that's traded since 2010. Well, Tesla rising above $800 billion in market value, Elon Musk passing Amazon CEO Jeff Bezos by a wider margin as the world's richest person. I mean, it's a juggernaut at this point. And there's a Tesla market, and then there's the rest of the stock market. That's what it feels like today.
There's also analyst capitulation. I mean, you had Evercore now chiming in about this stock. We've had all these folks and analysts who follow it that said who were bearish or held back on Tesla. And, as they did, they lost a lot of money if investors were following them. But you've got, as you said, Dave, Tesla up for an 11th day, longest winning streak. Evercore ISI removing a sell rating on the stock for the first time in a year. Do you know how much they lost in a year? They lost a lot.
Yeah, no question. And Tesla is the best performer on the day in the S&P 500, just in percentage terms, of 6.3%. It's a Tesla market, and then there's the rest of the stock market.
What does that mean, though, if Tesla, when this rocket ride on Elon Musk's rocket ship known as Tesla, when this comes to a halt?
Because
it has to.
If it comes to a halt,
Carol,
it could have a 10% correction and go higher.
Yeah, it could.
Boy, I mean, that really becomes the question because, it's clear that as much as Tesla has become what you might call a big tech company, certainly in terms of market value,
right?
Well, it's still a relatively speculative stock. I mean, look at
what's going on with
Bitcoin, and you got to put Tesla in that context. Bitcoin going above $40,000 yesterday and sort of hanging around there now.
Yeah, the real question, I think, is when you get real competitors to what Tesla offers, and I don't think we've quite gotten it yet from some of the traditional automakers. They're trying, but they're taking a long time to offer up what Elon Musk is already doing, and he's disrupting how you do it. And I think Americans, shoppers, consumers are looking for new ways to buy cars. Guys, we got to run. Carl Ganana, thank you so much. Great to have you here. Dave Wilson will be back a little bit later on. We got a lot going on. We are going to talk about to impeach or not to impeach, because that is going around on Capitol Hill.
Yeah, gaining more and more support from sitting Democrats and even Republicans chiming in and saying, hey, it might be a good idea.
Yeah, so we're going to talk about that. We're certainly going to get into also a little bit of some of the situations and maybe issues are going to be facing Joe Biden when he steps into the White House, and that includes U.S.-China relations. Also, $1 trillion in student debt. It's for Bloomberg Business Week. It's a story, but it's been an issue that's been really overhanging us for a long time.
Yeah, I mean, it's exploded in the last 15 years. This is an issue that when you talk to millennials, this is like their number one economic issue, is this outstanding student loan debt.
Rightfully so. All right, looking forward to that. Let's get to the Bloomberg Business Week Bite of the Day. Just quickly, one number that tells us a lot, $750 million. AMC Entertainment, America's biggest movie chain, getting closer to its goal of raising enough money by the end of January to stave off bankruptcy. So it's looking to raise about $750 million, according to the company's CEO, by the end of the month. It needs a lot of cash to keep going. All right, let's get to world and national news. Patiently sitting by, Nancy Lyons. Hey, Nance.
Hey, Carol. President Trump is confirming he will not be attending the inauguration of Joe Biden, even though he did promise a smooth transition of power in a video he posted last night. House Democratic leaders continue to discuss the possibility of bringing up articles of impeachment against the president as soon as next week. That's if Vice President Mike Pence and Trump's cabinet do not act to remove him before then. Senator Ben Sasse is one of the Republicans condemning the president.
Donald Trump has acted shamefully. He has been in flagrant dereliction of his duty, and he will be remembered for having incited this and for having drawn more division into an already divided people. That is who Donald Trump is. That is what his legacy is going to be.
Sasse appeared on CBS this morning. A fifth person has died from the violence, a Capitol Police officer who was injured in the melee. Former Trump campaign lawyer Sidney Powell is being sued for defamation by the voting machine company she repeatedly placed at the center of vast and unfounded election conspiracies that she claims switched votes to favor President-elect Joe Biden. The complaint was filed today by Dominion Voting Systems, seeking $1.3 billion from Powell. Well, tonight is Alex Trebek's swan song on Jeopardy! The last taped episode before his death will air today. It was taped just 10 days before the host died of pancreatic cancer. Executive producer Mike Richards spoke about it on ABC.
He didn't know it was going to be his last show. The contestants didn't know. We didn't know. He signs off and says, we'll see you next time.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
Hey, thank you, Nancy Lyons. Appreciate it.
Yeah, Nancy Lyons, they are called national news. You're listening to Bloomberg Business Week. Let's talk about some of the stories when it has to how it pertains to the virus, because we've got a couple that are on the Bloomberg that definitely caught our attention. I think the one that I'm thinking about is how the Biden administration is going to handle all of this. And he says, Joe Biden, President-elect Joe Biden says he's going to release more vaccines in a gamble on second doses. So
here's the hiccup with that. It's not necessarily about releasing the doses from the what the federal government has. It's about the rollout on a state-by-state basis. Because each state has a different plan for rolling out the vaccine, and there isn't this one coherent policy nationwide, we see it working better in some places than in other places. And you could look at our home city and home state for a great example of that. The mayor and the governor totally disagreeing with how things should go out. And that's the challenge.
Yeah, well, I think what's interesting, too, is my understanding is his talking about releasing what has been held back for that second dose.
Yeah.
So, which kind of the FDA has said, listen, we want to follow the protocol of everyone needs to get 2 doses. We know the efficacy when we do that, right? And I know there's been a lot of conversation about, maybe it's better to get maybe a lower efficacy rate, right?
Maybe. I mean,
but
there's disagreement.
Get it out to more people.
Maybe. We don't know the answer to that.
We don't know the answer
and
to that.
There's not scientific consensus on what the right move is. You have some public health experts saying, hey, that's not a good idea to do that. Let's stick to the original plan. Others saying, hey, this could be the best way for us to at least reach some level of herd immunity.
Yeah, exactly. And I think what's also interesting, and we'll get into this with our first guest, I know Andrew Cuomo has talked about, listen, frontline health workers, if you don't want to take the vaccine, we're going to maybe then release it to other folks.
And you're going to the back of the line if you reject it.
Yeah, listen, we've had these conversations at home. Part of me is getting to a point, I think we have to take care of our frontline workers, no doubt about it. But if they're not interested, let's open it up to the public.
And the older population, the ones who are most at risk.
All right, exactly. All right, we're going to dig a little bit deeper into the virus in just a moment.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A choppy trading session today. We've got NASDAQ now on the plus side. Last update, I told you NASDAQ was lower right now, up 41 points. Again, back at a record, up 0.3%. The S&P is down 2 points. Lower, a little change right now, down less than 0.1%. The Dow's down 106, a drop there of 0.3%. Stocks falling from records after a news report that West Virginia Senator Joe Manchin will oppose further direct aid payments, denting hopes for another sweeping spending bill. We've got gold down 3.7%, dropping $70 the ounce to $18.43. 10-year yield 1.10%, and West Texas Intermediate crude up 2.3%, $52.01 a barrel on WTI. BMW has outsold Toyota Motors' Lexus brand and Daimler's Mercedes-Benz to lead U.S. luxury car sales for the fourth quarter and full year. And for the 11th day in a row, Tesla shares are higher, up again by 5.2%, trading at a record. This week, first full trading week of the new year, Tesla shares have advanced 21.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. All right, well, got some really rough numbers. The U.S. posted a record for daily COVID-19 deaths, fatalities surpassing 4,000 for the first time. Viruses surge contributing to the first drop in U.S. jobs in 8 months. We talked about that, Tim, at the top of the show. London's mayor declaring an emergency as the U.K. reported record fatalities. Germany also reported the most daily deaths since the start of the pandemic. And then we just talked about, Joe Biden, president-elect, starting to hear about how he will approach this situation.
He is inheriting a challenge. 4,000, think about that for a second. That's 4,000 people who had friends, family, loved ones, children, parents. This is awful.
Right. And, I always kind of do the 4,000 times 7 could be 28,000 in a week.
Yeah.
Just in our country alone. So let's get into this with someone who has been looking at this, dealing with this from day one. Dr. Ian Lustbader, back with us as he is every Friday, clinical associate professor of medicine at NYU Langone Medical Center, on the phone in New York City. Dr. Lustbader, nice to have you back here on Bloomberg. How are you? What are you seeing? It feels pretty ominous. It feels like that dark winter is upon us, but how do you see it? What are you seeing?
Yes, Happy New Year, Carol and Tim.
Yeah, to you.
Thank you. It definitely is another wave of infections and deaths. We did anticipate after the holidays that and the New Year celebration that sometime over the last 2 to 3 weeks that we would be seeing another bump in surge in cases, and that's really what's been happening in the hospitals and unfortunately with deaths as well. And I think the vaccine rollout has been slower than anticipated. We can talk about some of the reasons that may be the case. Obviously, that takes a little while to develop immunity, but certainly that would have been helpful to, I think, slow much of what we're seeing. And so I agree. I think it is worrisome and no clear break in the trend at this point, which is unfortunate.
How does this trend break? Is it because of the vaccine? Is it because of the sad truth that more and more people will be infected and develop herd immunity that way? I mean, how do we get out of this spike that we're in?
We have to continue as we've been saying and doing with masks, hand washing, social distancing.
But that's not working.
Really, exactly. Herd immunity, the slow development, the painful way to develop herd immunity is having all these infections and surviving. We do have to remember that, still it's somewhere in the range of a 1% or so case fatality rate. So the majority of people do survive. Obviously, we see a lot of post-COVID syndrome with a lot of long-term effects. But really, the vaccine is going to be the way to break this. And I think we may have to change our strategy, this sort of staged deployment that I think really isn't working well.
Well, let's talk about that, because we did talk about the president-elect Joe Biden saying he'll distribute more of the available doses, excuse me, let me slow down, the available doses of coronavirus vaccines. So reversing what the Trump administration had planned to do, they were going to hold back, Ian, that second dose to ensure that they're available for people who've already had the first shot. Do you think maybe we have to back off of that?
I think the staged approach on paper made sense. Sort of the New York State, 1A, 1B, these different tranches of people, healthcare frontline workers. To me that made sense initially. I'm getting my second shot later today, and I think it's worked well. Very few problems with fever or chills or some aches. But when I speak to a number of other healthcare workers, there's about a 30% vaccine hesitancy.
Why is that?
Well, in speaking to people around me who are reluctant, they feel the vaccine's been rushed. They feel they don't want to be in the first group. They've heard stories, incorrect stories really, on the internet of fertility issues or other issues. Some of these are young women who are nurses or medical assistants or techs. Most of the physicians I know are on board and are happy to sign up. So I think, maybe there's either a cultural element or just a fear of something new, but it is real. And even when you say to them, you may have to go to the back of the line if you don't take it now, they don't seem to be afraid of that. They're like, you know what, we don't want to be, there are early adopters and late adopters, and there's a fair percent of healthcare workers, seemingly, that really are not early adopters. And because of that, I think we should be offering vaccines to really anyone who wants them. I think it's a sin that we have hundreds of thousands of doses on the shelves. I see somewhere around 100 patients a week, and I would say 95% of them said at their visit over the last few weeks, if there was a vaccine available, please give it to me. And candidly, I think now in retrospect, we probably should be giving that to patients at the time of encountering.
Tim has been like, every day he's like, poke me 10 times. Like, just give it to me.
I'm walking around with the shirt sleeve rolled up, just ready for anyone to give me a shot who has one.
No, it's like, I guess we're going to have to, maybe, rethink how we're doing this because it just feels like the rollout is too slow. Hey, Ian, sit tight for a second. We're going to do a little bit of news, but we'll come back and continue with you. Dr. Ian Lusbader, he'll be back in a moment. Clinical Associate Professor of Medicine at NYU Langone Medical Center on the phone from New York City. I do think, do we just have to open up some big centers and just line them up where people who lined up, to get tests do the same thing, like roll out your arm, but you got to remember people have to be watched for any reaction.
Yeah, they do, and obviously I want this done in a way where a professional is the one who gives it to me, and I'm not going to pretend to know what the answer is on how to do this. What I know is that what we're doing now is just not working.
Exactly, and it just feels way too slow. All right, we'll continue talking about COVID-19 and the vaccine rollout. You're listening to Bloomberg Business Week. Yes, it's Friday. Carol Massar along with Tim Stanovic, and this is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So, Tim, I think I didn't read earlier, but right now we are on, in terms of global virus cases, passing 88.2 million, deaths surpassing 1.9 million, and the vaccine, more than 17.5 million shots have been given globally.
There's more than 6 billion people on this planet.
Yep. So
for context, just for context.
But important context. And this gets to what we've been talking with Ian. We'll get back to him, though, in just a moment. Let's get a check on your top business stories. Another look at that trading day. Here is Charlie Pellet.
Hi, thank you very much. And here's what's going on. Choppy session. S&P, NASDAQ both higher. Dow lower. Do want to begin with two headlines. Las Vegas Sands said to be discussing a push into sports betting. Shares of Las Vegas Sands, ticker LVS, they are down now by 0.2%. New York Governor Andrew Cuomo is calling for impeachment if President Trump refuses to resign. Stocks pairing gains as traders assess prospects for an economic rebound from a pandemic-induced recession amid stimulus measures and a resurgent coronavirus. S&P off session highs, up 3 now, a gain of 0.1%. NASDAQ, though, on track for a record close. Last update, we did have NASDAQ lower. Right now, NASDAQ up 61, a gain of 0.5%. S&P up 3, up 0.1. The Dow does remain lower, down 72 points, drop there of 0.2%. 10-years down 6/30 seconds, 10-year yield 1.1%. Gold plunging 3.7%, down $70 the ounce now at 1843. West Texas the ounce now at 1843. West Texas Intermediate crude Friday rally 52.27 a barrel. WTI up by 2.8%. The UK has cleared Moderna's COVID-19 vaccine, adding a third shot for emergency use against the pandemic as infections surge. The UK also ordering an additional 10 million Moderna doses. Shares of Moderna trading lower today, down by 2.5%. Well, today the U.S. jobs report showed soaring coronavirus infections exacted a bigger toll on jobs and jeopardized the economy's progress. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health.
We're at numbers that are higher than there were at the times in the pandemic in March when we shut down large portions of the country. Yet we're not seeing similar types of interventions put in place to be able to drop the number of cases right now. Vaccines aren't going to help us with the case numbers right now. We have to re-engage in those public health interventions to make sure that we can get these numbers under control for the rest of the winter.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Recapping crude, highest since February, up today at 52.26 a barrel, up 2.8%. Stocks mixed, S&P up 3, a gain of 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right. Thank you very much, Charlie. I want to get back to our guest, Dr. Ian Lustbader. He's a clinical associate professor of medicine at NYU's Langone Medical Center. Joins us right now on the phone from New York City. Dr. Lustbader, I've been thinking a lot and talking a lot with Carol about this too. What life looks like on the other side of this pandemic.
Because we really want to get back there.
Yeah, and I guess the question I struggle with is, are we ever going to get back to what things looked like, in 2019 and 2018, or are we going to be carrying around masks with us for the rest of our lives?
Well, I believe we will. I really think this coming summer will look normal, in my opinion. I think if we're able to get these vaccines out, and as we've said, this has really been more of a struggle than we thought with vaccine hesitancy and logistics and distribution. We can talk a little more about that because I'm now of the belief that if we can have lines of cars for swabbing patients and people, that we should be able to be administering vaccines. And I agree, we do need to watch people for a bit of time, although the experience that I've seen here in real life, the number of reactions within 15 or 20 minutes or even a half hour after the vaccines are really minuscule. So I think there's a lot less of those concerns than we previously thought. But I do think once those vaccines are distributed, once we are towards herd immunity, either from infections, and we are seeing this surge, unfortunately, over the last few weeks and probably will continue over the next few weeks, I really do think by next summer, life can return to normal. psychologically, will people be wearing masks as they do in some Asian countries no matter what, whether they have a cough or a cold or something else? That, for some people, I think that may be part of their new attire. But I think for most of us, we should be able to resume indoor dining and resume normal activities in around that time. I really do anticipate those vaccines being given out to everyone who wants them, certainly over the next few months. Now, businesses and economic fallout, that may be worse than we anticipated, but I think otherwise, from an infectious disease point of view, I think life should look fairly normal by next summer. The problem is how
You mean
do we
this
get
summer?
there?
This summer, or do you?
This summer.
Okay,
This
2021.
That's
right?
an aggressive, but I like it.
Yeah. Well, and getting warm again is going to help us too, correct? If we warm, vaccine, all that stuff.
Well, there are a number of factors. We are seeing some new strains and some mutations. It does appear the vaccines, because they're this polyclonal, meaning antibodies to different parts of the spike protein. So far, we haven't seen any mutations that seem to make it resistant to the vaccine. Theoretically, could that occur? We do know viruses mutate. Things like the flu virus, need a new vaccine every year. We don't really think that we're going to need a new coronavirus vaccine every year. But I think the technology has been proven. I think this has shown us a few holes in our system. For one, I think we should have had a universal health record, meaning everybody should be on an electronic medical record so they can be called in when vaccines are available. Anywhere across the country, they can get a vaccine and see when their last one was. I think we've seen really a lot of holes and areas of improvement, and I hope we address those.
Hey, really quickly, because I know we're waiting for Joe Biden to make some comments. Listeners writing me, could you ask the doctor you're interviewing if people can suddenly become reinfectious after having the virus? Just quickly, Ian, on that.
Yes, it is a low likelihood, but that's why we do suggest even after the disease or vaccine, at least for a few months, people wear masks, because you can swab their nasal pharynx and do recover some virus. So theoretically, even though they're immune, the patient's immune, either from the disease or from the vaccine, theoretically they can spread it. So we do advise masks, at least for the near future.
They can spread it, but can they get it again?
Very unlikely, very, very unlikely. Those are literally a handful of cases. I would feel very safe after the vaccine or having the disease. Some people do lose antibodies, and there have been a few cases of getting reinfected, very uncommon.
I wonder about the idea of the mutations. Even though we're seeing these mutations very briefly, can you get reinfected with a different mutation?
Yes, I mean, that can happen, but it appears that you're not as sick. In other words, you may have that virus or there's a difference between infection, illness, and then transmitting that as well. So people may get infected, but it is unlikely for them to get ill because you have some antibodies which do provide some infection, which is also the rationale, even for one shot, it should give you a decreased severity of disease if you get that.
These are the questions everybody's asking. Ian, you're the best. Have a good, safe weekend. Really appreciate it. Happy New Year once again to you. Dr. Ian Lustbader, Clinical Associate Professor of Medicine at NYU Langone Medical Center, on the phone in New York City. He ticked off a lot of questions for me, too.
That was great.
All right, let's get to world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. President-elect Joe Biden is rolling out his final cabinet picks. He says his choices will make his cabinet historically diverse and immensely talented.
It has more than a dozen history-making appointments, including the first woman Secretary of Treasury, first African-American Defense Secretary, the first openly gay cabinet member, and the first Native American cabinet secretary.
Today, he introduced the mayor of Boston, Marty Walsh, as his candidate for labor secretary, and Rhode Island Governor Gina Raimondo as his choice to be commerce secretary. Well, President Trump says he will not be attending Biden's inauguration January 20th. He made the declaration today in a tweet. The last living U.S. president to skip his successor's inauguration was Richard Nixon, who resigned due to the Watergate scandal and left Washington before Gerald Ford took the oath of office. Trump's tweet today follows a video he posted yesterday in which he condemned the storming of the U.S. Capitol by his supporters and said he was preparing for a smooth transition to President-elect Joe Biden. Well, the change in tone from the president appears to be too little too late for Democrats, who are mulling over whether to impeach the president again, this time for inciting the violence. Congresswoman Catherine Clark, Assistant House Speaker, spoke about the prospects for impeachment with CNN.
Every day that Donald Trump is president of the United States is a day of grave danger. So we can use procedural tools to get articles of impeachment to the floor for a House vote quickly.
She says it could happen as early as next week. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Back to you, Carol and Tim.
All right, got it, Nancy. Thank you so much. Really appreciate that update. So we're watching a feed right now from Delaware because we do expect President-elect Joe Biden to come back and make some comments, maybe take some questions from the members of the press community. He has been laying out certainly his administration and naming more individuals. So we'll continue to monitor and then take you there. In the meantime, then, I feel like everybody's on steroids when it comes to, okay, what can we now get done?
Yeah, I mean, well, look, this is literally the slimmest of majorities that Democrats have, but it does, and as we learned today from Joe Manchin, a little bit of a window here. As we learned from Joe Manchin, it doesn't mean a guarantee to everything.
No, exactly. But maybe we'll have some really smart debate, and maybe because it is such a slim margin, it just kind of puts everybody on a much more equal footing.
The joke about infrastructure. There's a joke about Infrastructure Week.
What is that?
Well, whenever President Trump tried to have Infrastructure Week, there was always some bigger story or bigger scandal that sidelined the focus on infrastructure. And I'm wondering if that continues into the Biden administration. I doubt it. And infrastructure is something they're certainly going to focus on. And it's one of the most popular articles that we're seeing on the Bloomberg today because the Senate flip buoys the New Jersey, New York tunnel backers who hope Schumer delivers. This is by our colleague Keith Lang, who writes that the elevation of New York Senator Chuck Schumer to majority leader has backers of the proposed Gateway Rail Tunnel to link New York and New Jersey hoping it's back on track.
It's a massive project. It's about $11 billion. It has really just languished, and it was something, there's been a lot of fighting between President Trump and Democratic governors in the two states. As someone who is born and bred in New Jersey, and I commute back and forth, you're from the West Coast, but you're now in New York.
I have some love for the Gateway Tunnel project.
We're waiting to believe that. But anyway, but listen, anybody who commutes in and out of the city, you know how stressed the existing ways in and out are. And so if we can create another way, and then we're also talking about, I think they would throw a subway train through that, right, as well?
Yeah, definitely.
Which would be huge.
That would be huge. And I think anyone who's traveled outside of the United States to countries that have infrastructure under control know that infrastructure here in the United States, whether you're talking about roads, bridges, tunnels, airports, you name it.
All of it.
Is, am I crossing the line by saying it's a disaster? It's a disaster. I mean, we really need to fix it here in the U.S., and this could be an opportunity for that to happen. It's just a difficult thing for politicians to do because it is so expensive.
Right.
And it's targeted geographically.
Yeah, exactly. You're right. And that's why it makes it so difficult. But for someone who commutes, PATH train, subways, I mean, the PATH train is packed in the morning already. And it's like, you're squeezing in. There's a lot of people who live just outside New York City. And I just think about, if we can figure out ways to do it better. I also think that there's also would be tourism going back and forth. There's a lot on the other side. Like, I just think if you make it easy or open up another outlet, it would be really significant things. You're shaking your head.
Well, I mean, I'm thinking of all the places that I've traveled where it's just so easy to get from the airport to the center of the city. And it creates an opportunity for people to spend money on layovers. Like Toronto, for example. If you have a long layover, you get a free pass to go into the city.
How smart is that?
It's so smart. You support businesses. You spend hundreds of dollars on a 6-hour layover. It's brilliant.
And go to that big mall that's out there in Secaucus or wherever it is.
The American dream.
Yeah, that just kind of keeps reinventing itself. All right, anyway, great story and something we'll see whether or not it picks up some real momentum when we get a new Biden administration and everybody in there in D.C. going. In the meantime, when we speak about the Biden administration, so many things that will be on his plate when he hits the White House day one. what to do to about $1 trillion in student debt. It's just one of those many things that will be on his plate. Writing about it and reporting for Bloomberg Business Week is Ben Holland, Bloomberg News political economy editor, on the phone in Bethesda, Maryland. Also here, Bloomberg Business Week editor Joel Weber on the remote line from Brooklyn. So, Joel, we've been just watching this number go up and up over the last few years. It's a big one, and it's problematic for students who do have student debt.
Yeah, so 1.7 trillion. That's the number for student debt in the country right now, and so we're going to very quickly see President Biden step in to office, and among other battles that await him, from getting vaccines out to dealing with the Trump legacy, this other one, the $1 trillion problem that is student debt, is going to immediately come to become like probably headline news, I think. And the tension here is, on one side, you've got people who say this would be a huge boon for the economy just to really write off more debt and give people a clean slate in some cases. And on the other side, you have people saying, "Look, that's just going to benefit the wealthy. There's no reason to do it." And so there's been some pushback, and that's what Ben sort of dove into. So Ben, there's two sides here: a huge pile of money of debt that's weighing on the economy theoretically. So what is the way to think about this issue, and what can we expect from President Biden?
Well, we can expect President Biden to do something about this very early on. I think he has no choice but to do something, because as things stand, the pandemic freeze on this stuff, that means nobody has to make payments and interest doesn't accumulate, is going to finish at the end of January. And there is no way that the Biden administration will want people to have to start repaying those debts in February. And so they'll have to, at the minimum, extend that freeze, and if they do that, I guess it would give them more time to figure out a more lasting solution. Hey, within the Democratic Party, there are certainly people who say, yeah, let's forgive a whole $1 trillion of this, which would be $50,000 per person. There are also people who say, look, is this the policy we want to do right now? This is going to benefit college grads. They tend to be better off, and the people who are really hurting now are lower income workers who've got their jobs and who mostly don't have degrees.
So Ben, what is the naysayer take on this? I find really interesting, because it would seem to me like, okay, this debt is just sitting out there. Let's just cut some of it and get rid of it. But why is the case that we might not want to consider that solution?
Well, I think part of the argument, which is often the case with arguments about kind of debt forgiveness type policies, you had it with the debate of mortgage write-downs after 2008, and it's really an argument about fairness. And there are two sides to that. You could say that writing off debt is unfair on people who did go to college but did pay off their debts, and you could say it's unfair on people who didn't go to college, because why divert the resources to those families that are relatively better off? And I guess the way that supporters of the policy would reply to that second point as well. We're not saying this is the only thing the government should do. Of course, the government should help people who don't have degrees. But meanwhile, you have 40 million plus people out there who are really underwater on this stuff. And by cutting the losses, you're doing the economy a favor in the longer run.
Ben, this disproportionately affecting young people, millennials especially, hard hit by student loan debt. Take us through what has happened over the last 15, 20 years that has just caused this to balloon out of control, and whether or not this problem is going to continue. Because if you get rid of student loan debt now, you're not really fixing it if you don't address the cost of college in the future.
Exactly.
That is certainly true. Yeah, that's certainly true. So I think the reason it kind of snowballed is partly because colleges raised their fees, and it tends to be easy for people to raise the price of things when people are paying for that thing in credit, and credit is easy to come by. We saw that with the housing bubble before 2008 too. And it's partly because, in the last 15 years or so in America, on the whole, household wages, household incomes have not gone up all that fast. So you have rising college fees, and you have incomes that are not rising all that fast as a recipe for debts that can't be paid. And then you have one other issue, that is people who simply taking out loans and then never finishing their degree. There's a surprisingly large number of people like that.
So I do wonder, what kind of momentum do you think, Ben, is ultimately out there? I mean, Joe Biden and team, they're going to hit, the ground running on so many different issues. We were just talking with Dr. Ian Lusbader over at NYU Langone about, how we need to speed up the rollout of this vaccine and the access for masses here in the country if we really want to hit herd immunity. So how likely is this going to be a priority in the early going?
I think it's very early on. It's not going to be the priority, but as I said earlier, I think it's a priority for them to make sure that nobody has to suddenly start making their student loan things stand. They will do. So they've got to do something on that. They've got to, at the very least, extend the freeze, and that gives them a bit more time, and I think then push back the question of whether to forgive.
Got it.
He did run on forgiving 10K, so I think they see something.
Ben, we have to jump in because the man of the hour, President-elect Joe Biden, is actually making some comments. So let's head to Delaware and listen in.
Mr. President-elect, while we have been here, as you've been announcing your economic team, we've learned that House Democrats are currently planning to introduce articles of impeachment against President Trump as soon as Monday. At that point, it'll be just a little over a week before the president leaves office. Do you believe this is a good idea?
Look, I've thought for a long, long time that President Trump wasn't fit to hold the job. That's why I ran. And my job now, in 12 days, God willing, I'll be President of the United States of America. And I'm focused on the urgency of three immediate concerns. One, the virus, getting it under control, getting the vaccine from a vial into people's arms. I think the way it's being done now has been very, very sad. Number two, we've had 4,000 deaths. 4,000 deaths yesterday. And things continue to rise, to escalate. That's my number one concern, to get the virus under control. We lost over 125,000 jobs this last month, and people are really, really, really in desperate shape. And so I'm focused on the virus, the vaccine, and economic growth. What the Congress decides to do is for them to decide. But I'm going to have to, and they're going to have to be ready to hit the ground running, because when Kamala and I are sworn in, we're going to be introducing immediately significant pieces of legislation to deal with the virus, deal with the economy, and deal with economic growth. So we're going to do our job, and the Congress can decide how to proceed with theirs.
But if a Democratic member of Congress were to call and ask for your advice about whether they should proceed with this, what would you tell them?
I'd tell them that's a decision for the Congress to make. I'm focused on my job.
And did you speak with House Speaker Nancy Pelosi before this decision was made, or is that conversation that's still going to happen?
I'll be speaking with Nancy and the Democratic leadership this afternoon, as a matter of fact, about my agenda, as well as whatever they want to talk to me about.
Okay, thanks.
Thanks, Mr. President-elect.
Thank you, Ken.
I wanted to ask you about your agenda in light of the jobs report that came out today. You're going to be laying out the principles of your plan. Do you think the need in the COVID relief bill is greater than you anticipated? And what is the price tag that you're looking at? I've been told it could be in the $2 to $3 trillion range. And then as it relates to the direct cash payments, you've talked about the need for $2,000 checks. Do you want to see that in a Senate standalone bill as a way to speed up the process? Or do you think those direct cash payments should be part of the package that you're going to be proposing?
Well, we're going to be proposing an entire package. And parts of that package are of equal consequence to people. Unemployment insurance, being able to continue with rent forbearance, the whole range of issues. So that's number one. We think that they all have to be dealt with. the price tag will be high. But as I said, made scant reference to in my opening comments, the overwhelming consensus among the leading economists, left, right, and center, is that in order to keep the economy from collapsing this year and getting much, much worse, we should be investing significant amounts of money right now to grow the economy. And that's a pretty wide consensus. And as you know, Moody's had done an analysis of what I originally had been talking about and said that it was necessary to keep the economy from going down. It would rise, we'd create 18.6 million jobs, create $2 trillion more in economic growth than the other administration would, this outgoing administration. So it is necessary to spend the money now. The answer is yes, it will be in the trillions of dollars, the entire package. But it will be, I'll be here next Thursday laying out in detail how that package is going to go. But the basic story is simple, that if we don't act now, things are going to get much worse and harder to get out of the hole later. So we have to invest now. Secondly, we're going to have to meet the emergency needs of the American people. I mean, literally, I know you know this, Ken, that people are having trouble just putting food on the table, just having to keep the payment of their car, maybe able to turn the lights on. There's a dire, dire need to act now, purely out of what is a humanitarian need here at home. And thirdly, we're going to, in the third stage of this, the whole story is we're going to have to invest, as I suggested throughout the campaign, in infrastructure, in healthcare, and a whole range of things that are going to generate good paying jobs that will allow us to grow the economy. So that's a long answer to a short question, which is that the idea of, with interest rates as low as they are, with the Fed having had its power sort of taken away in terms of what they could do to help this administration like last, it's important across the board. Every major economist thinks we should be investing in deficit spending in order to generate economic growth.
And I wanted to ask you about what took place at the Capitol this week. You served in the Senate for 36 years, and importantly, you were there in 1983 when there was an explosion in a Senate quarter. You were there in 1998 when 2 Capitol police officers were shot. You were there during the anthrax attacks in 2001. What kind of an investigation needs to take place, and what steps need to take place to improve the security of the Capitol? And then secondly, how do you think the people who are involved in the storming of the Capitol, how should they be treated by your Justice Department? Should they be treated as domestic terrorists?
Yes, they should be treated as they're a bunch of thugs, insurrectionists, white supremacists, anti-Semites. 6N is not enough. I mean, come on, you know, these shirts they're wearing, these are a bunch of thugs, and they're terrorists, domestic terrorists. And that'll be a judgment for the Justice Department to make as to what the charges should be. But the fact is, they should be prosecuted. They should be prosecuted. The difference here is, this had the active encouragement of a sitting president of the United States. And the way in which the breakdown in security occurred needs to be thoroughly investigated. I'm not going to prejudge what it was, but the idea that these people were able to just march up the stairs, march in, and do it in the way we had, there's a great debate. I don't know the answer. Great debate now. Was the governor of Maryland correct when he said that I was ready to send in the National Guard? I couldn't get authorization. What happened? It deserves a full-blown investigation. People be held accountable, and steps taken that something like this could never happen again. And the difference this time is every nation has dealt, every democracy has dealt with individual terrorist attacks by groups that are very targeted. The largest target was 9/11 and the buildings. Well, right down to blowing up, you know, a bomb going off in the Capitol when I was there, 2 policemen. But the idea that thousands of people could be marching up the steps of the United States Capitol, breaking windows, breaking doors, forcing their way in, stepping aside. And the photographs of, well, I don't know what the circumstances, the photograph of it looked like You had some of the Capitol Police taking selfies with these people. That has to be thoroughly investigated. The authorities responsible have to be held accountable for the failures that occurred, and we have to make sure that this can never, ever happen again. The damage done to our reputation around the world by a president of the United States encouraging a mob. This reminded me more of states I've visited over the 100 countries I've gone to, in third tin horn dictatorships. It just cannot be sustained, has to be immediately investigated in depth, and people have to be held accountable.
And lastly, do you think you need to change any of the planning for your inauguration as a result of this?
A totally different entity is in charge of the inauguration that was in charge of protecting the Capitol, the Secret Service. I have great confidence in the Secret Service. I have great confidence in their ability to make sure that the inauguration goes off safely and goes off without a hitch. So it's a different. So I have confidence in what is going in the planning that's been underway before this, and continues with the Secret Service as the lead agency.
Thank you.
Thank you.
President-elect Biden, Vice President-elect Harris, good to see you both. I want to pick up on something that you just said about President Trump actively encouraging the insurrection at the Capitol. Given the perceived threat that he poses, my question to you is not so much about the role that Congress should play in impeachment, but rather, should President Trump, in your estimation, remain in office?
I didn't think, look, I've been saying for now well over a year, he is not fit to serve. He is not fit to serve. He's one of the most incompetent presidents in the history of the United States of America. And so the idea that I think he shouldn't be out of office yesterday is not the issue. The question is, what happens with 14 days left to go or 13 days left to go? And I think that what 81 million people stood up and said, it's time for him to go. And the United States Senate voted 93-6 to confirm that we should be sworn in. We were duly elected. So I think it's important we get on with the business of getting him out of office. The quickest way that will happen is us being sworn in on the 20th. What action happens before or after that is a judgment for the Congress to make, but that's what I am looking forward to, him leaving office. I was told that on the way up here, way over here, that he indicated he wasn't going to show up at the inauguration. One of the few things he and I have ever agreed on. It's a good thing him not showing up.
Earlier, you'd said that if you'd hope that he would show up only in the sense that it was valuable to send a signal to the world about the transfer of power. You've clearly changed your perspective on that.
Because he has clearly demonstrated, he's exceeded even my worst notions about him. He's been an embarrassment to the country, embarrassed us around the world, not worthy to hold that office. If we were 6 months out, we should be moving everything to get him out of office, impeaching him again, trying to invoke the 25th Amendment, whatever it took to get him out of office. But I am focused now on us taking control as president and vice president on the 20th, and to get our agenda moving as quickly as we can. Thank you.
Another question about holding public officials to account, and this is about an issue that's no longer a headline, but is no less significant and serious, and that's about the more than 600 children who were orphaned under the Trump administration as a result of the family separation policy along the border. During the campaign, you said that practice was criminal. Will you commit to making sure that the Trump administration officials responsible for that policy will be held to account?
I'll commit that our Justice Department and our investigative arms will make judgments about who is responsible, how they're responsible, and whether or not the conduct is criminal across the board. But as I said yesterday, I am not going to tell the Justice Department who they should prosecute and who they should not. That's a judgment that will be made by the Attorney General of the United States of America. not influenced by me. But there will be a thorough investigation of who's responsible and whether or not the responsibility is criminal. And if that is concluded, the Attorney General will make that judgment. I will not intervene to tell him who he should or shouldn't indict or if he should indict.
And lastly, beyond the COVID plan, which you've detailed, what are your legislative priorities? You've talked about infrastructure. You've talked about introducing an immigration bill. After January 20th, Democrats will control the House and the Senate. What do you do first?
Three different issues there in that same question. One, the commitments I made that what I would introduce, not necessarily we would move to, but introduce in the United States Congress first, I will do. I will introduce an immigration bill immediately and have it sent to the appropriate committees to begin movement. I will, in fact, countermand executive orders that the president has, in fact, initiated that are contrary to what I think is either his authority and or, even if it's his authority, contrary to the interests of the United States on environmental issues and a whole range of other things. And thirdly, I will immediately move, though, to the most urgent need of asking the Congress to give me the financial wherewithal to deal with the virus, to be able to move so that we have Operation Warp Speed really working. Warp Speed got the vaccine to places that were delivered, but did not get them from those vials into people's arms. And so it is a gigantic logistical concern of how we do that. I'm committed to get 100 million shots in people's arms in the first 100 days. I'm committed to insisting that on all federal jurisdictions, any place I have control as president, everyone will be mandated to wear a mask in interstate transportation as well as federal facilities. And thirdly, I'm committed to moving as rapidly as possible to get the vaccine to teachers and the material to children that can provide for the safe opening of our schools at the end of that, beginning at the end of that 100 days. They're the most urgent things we have to do now, immediately upon getting office. There's going to be multiple things, as you well know, because you're a seasoned veteran of how this policy, how we work. And that is that there will be other committees will be holding hearings on a whole range of issues, from my positions on infrastructure, what we should be doing to generate a green economy, and so on. But in terms of the immediate need to get done, not just introduced, but to get done, voted on, and get the money and resources to do it, it turns out that the most urgent need is dealing with the virus, number one, and economic relief to Americans who, through no fault of their own, are really getting battered. Thank you.
Thank you, Mr. President-elect and Madam Vice President-elect. I want to follow up with respect to what you just said about the inauguration and that it's a good thing that the president is not coming. But what about the Vice President, Mike Pence?
He's welcome. I think it's important that as much as we can stick to what have been the historical precedents of how, in the circumstance in which an administration changes, should be maintained. And so if the Vice President is welcome to come, we'd be honored to have him there and to move forward in the transition.
Have you spoken to him at all?
No, I haven't.
And you have called for unity and healing in this country, but after the events of Wednesday, does that make your job easier or harder?
I think it makes my job easier, quite frankly. I've had a number of my Republican colleagues, former colleagues, I used to serve in the Senate for a long time, call me. Many of them are as outraged and disappointed and embarrassed and mortified by the president's conduct as I am and Democrats are. And I think I have said from the beginning, and I have not changed my view, my overarching objective is to unify this country. We must unify the country. And I think that You've heard me say this before, and I apologize for repeating myself, but understandably the questions are repetitive and good. I mean, I'm not being critical of the question. And that is that there's two ways people are inspired: by inspirational leaders and by terrible leaders. By terrible leaders. What this president has done is ripped the Band-Aid all the way off to let the country know who he is and what he's about and how thoroughly unfit for office he is. And you see already a number of Republicans. I was so proud. I know we're on opposite sides. I'll get criticized from some of the people in my party for saying this, but I've worked very hard with and against the former soon-to-be former majority leader, Mitch McConnell. I thought what he said on the floor of the United States Senate was, in fact, the right thing to do. He stood up. He's ashamed. I spoke with a guy I have enormous respect for, and I ran against him, Mitt Romney. I spoke to Mitt this morning again. This is a man of enormous integrity, who lives his faith. There are so many more, but there's others who should be ashamed of themselves. But they make up a minority of the Republican Party. This isn't about Republican Democrat anymore. This is about people who understand what this country's about and the things we have to agree on and move together on. I just think that if you look at it, speaking to some of my Republican colleagues, and I've spoken to a number of them over the last month since we've been elected, through recently as the day in which this god-awful debacle was taking place up on the Hill. And I think they understand that they're going to have to, we need a Republican Party. We need an opposition that's principled and strong. And I think you're going to see them going through this idea of what constitutes a Republican Party. And to hear some of my colleagues, Republican colleagues, talk about how shameful it is of the way Ted Cruz and others are dealing with this, how they're responsible as well for what happened.
Do you think some of them should resign? Should Senator Cruz or Senator Hawley resign?
I think they should be just flat beaten the next time they run. I think the American public has a real good, clear look at who they are. They're part of the big lie. The big lie. I was being reminded by a friend of mine, and maybe you were with me, I can't recall, when we were told that, you know, Goebbels and the great lie, you keep repeating the lie, repeating the lie. Well, there was a print that when Dresden was bombed, firebombed, there were 250 people that were killed. Or was it 2,500 people were killed? And Goebbels said, no, 25,000 or 250,000 were killed. And our papers printed that. Our papers printed it. It's the big lie. People will know it's one thing for one man, one woman, to repeat the lie over and over and over again. By the way, Trump said that before he ran. If you say it enough, I'm going to convince you. I'll say it enough. The press is bad. The press is bad. The press is bad. The press is bad. If he's the only one saying it, that's one thing. But the acolytes that follow him, like Cruz and others, they are as responsible as he is. And so it's not about whether or not they get impeached. It's about whether or not they can continue to hold power because of the disgust the American people have for their actions. There are decent people out there who actually believe these lies because they've heard it again and again. I was with a friend of mine who's a medical doctor telling me that his neighbor said to him, he lives in another state, his neighbor's a good person, said, but you know, Doc, this is true. There's a lot of chicanery that went on in this election. He said, tell me what? Well, I just know there was. They say it is. They say it is. This is a human condition. You say it and say it and say it and say it. The degree to which it becomes corrosive is in direct proportion to the number of people who say it. And so it's interesting to me, and I was pleased to hear some of the more prominent Republicans say to me that the Ted Cruzes of the world are as responsible in terms of people believing the lies as, not as responsible, but similarly responsible like Trump. But they didn't say, go to the Capitol, I'll be with you, follow. That's a different story. Thank you.
Thank you.
Thank you all very, very much.
So you've been listening
Appreciate
to President-elect Joe Biden there in Delaware. Some harsh words for Senator Cruz and Senator Hawley, saying they should be beaten next time that they run, but really kind of laying so much of the problems that led to what happened on Wednesday at the feet of several Republicans in terms of their continuing to support President Trump in his charges, allegations that there was fraud in the election. There is something, Tim, that when you say something over and over and over again, groups of people begin to believe it. And we certainly have seen that when you polled Americans. There are a lot of folks who did believe that there was fraud in the election.
Yeah, and we're seeing
despite any real evidence.
Yeah, we're seeing that. We saw that play out because the president repeated it over and over again, despite the fact that there was no evidence. The president-elect making a lot of news in his Q&A with reporters just now, saying that the stimulus package price tag will be, quote, high.
Trillions of dollars.
And he's going to lay out stimulus package details next Thursday. Yeah, trillions of dollars. He also said that the breakdown in the Capitol security must be investigated, and that police taking selfies with protesters must be probed.
Yeah, and listen, you and I were talking that we believe that this is the first time he has addressed the press community after what happened in Wednesday. Because Wednesday he did make a statement. It was short. I think it was about 8 minutes in total. I know when he walked off the stage, he said something to the reporters in the audience saying enough is enough. But this is the first time that he really answered an array of questions about what happened on Wednesday, specifically dealing with the vaccine, the virus, the spread, which is safe to say our biggest problem in the United States right now, and certainly getting the health and safety of the American public back to normal, and also getting our economy back to normal. He did do, and I want to just stress this again because the equity markets have rebounded on that headline of Joe Biden saying that he's going to call for trillions of dollars in immediate further economic support, including increased direct payments. Keep in mind, we had the worst monthly jobs report since the month of April. So he's talking about, let's get those $2,000 and let's see what else is to come.
The president-elect also saying, insisting on a mask mandate in all federal jurisdictions. And Carol, he's made news with his comment about Trump showing up to the inauguration. He said it's a good thing that President Trump isn't showing up to the inauguration, which is a reversal from what he had said earlier. But he said it's basically too late.
Right, exactly. And what's interesting is a little bit of a joke, but he just said, here's finally something I agree with the president, and that is that he will not show up at that inauguration. Hey, one other piece of headline news that we do want to bring you. Former GOP Senator David Perdue, he did congratulate Democrat John Ossoff on his victory in the Georgia runoff race, so congratulating. Wrapping up that, maybe officially, we expect this from candidates who lose. We expect them to come out and congratulate their opponent, the winner, and so we did get that.
We saw Senator Loeffler do that earlier this week, too.
Yeah, and I have to say, when she was on the floor of of Congress, after the chaos, after the mobs, after the break-in and breach into the U.S. Capitol, to see her finally come up and say, listen, I'm not going to fight the outcome of the Electoral College votes. I thought that was an important thing, and we needed to see that from Republicans.
Yeah,
and I think the country did
agree.
too. All right, listen, a lot to get to. We're going to talk a bit more about D.C. news and what Joe Biden had to say. In the meantime, let's get back to that trade because we are seeing a bounce off those lows, Charlie Pell.
Indeed, higher across the board, 41 minutes to go ahead of the closing bell on this Friday, January 8th. Stocks rising to records as investors assess prospects for additional stimulus under a Biden administration. You heard it here on Bloomberg Radio. S&P up after President-elect Joe Biden said he will be laying out details of a stimulus package in trillions of dollars next week. S&P up now by 12, a gain of 0.3%. The Dow holding on to a gain of 7 points, up less than 0.1%. NASDAQ at a record, up another 94, up another 0.7%. 10-year down 10/30 seconds, 10-year yield 1.11% this Friday. Gold down 3.5%, dropping $68 the ounce to $18.46, and crude above $52 a barrel, highest since last February way, up 3% right now, $52.39 a barrel. Again, recapping, stocks rebound on stimulus outlook. S&P up 12, up 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Got it, Charlie. Thank you so much. I want to get right to Kevin Whitelaw, U.S. Government Deputy Managing Editor at Bloomberg News. He's on the phone from Washington, D.C. Kevin, I'm assuming, just like Tim and myself and so many others here, listening to President-elect Joe Biden doing his first press conference since what happened in D.C. on Wednesday. What stood out for you? Because he covered a lot of areas.
Yeah, no, I think obviously everyone was looking to see what he was going to say about impeachment. That was with Democrats suddenly pressing really, really hard to go and try to impeach Donald Trump for a second time. Everyone was sort of waiting for that, and he tried to dodge the question as much as he could, but he did make it pretty clear that he wasn't really that interested in that path, that he wants to try to move forward with a set of other priorities. And he said the fastest way to remove Trump would be just to inaugurate Joe Biden. To me, obviously, I think the thing that stood out the most was him saying that he was pretty happy that Trump said he didn't want to attend the inauguration, something that Trump had said earlier today that had been his decision on that. Obviously, Biden's working hard to try to strike a tone of unity, saying he wants to unify America. So that was a pretty sharp thing to say in contrast to that tone.
Kevin, he also drew a distinction between Republicans in the Senate, saying that Ted Cruz and Josh Hawley should be beaten next time they run, while at the same time praising Mitt Romney and even Majority Leader Mitch McConnell. What did you make of his comments about Republican senators?
Yeah, well, I think a lot of people are also wondering whether there's going to be any effort to try to punish some of the senators who led some of the efforts to reject the Biden electors and were seen by some and been accused by some of helping to foment some of the anger and hostility that sort of erupted on Wednesday at the Capitol. I think Biden wants to set a tone where he's saying the election, the ballot box, that's the place where you beat these guys. And I think that was, it sounded both like a condemnation of them, but it was also a message to his own base to say, let's focus on what we need to do. Let's focus on moving ahead. There's people there we can work with, and the other ones we need to try to beat at the ballot box.
Well, that's what I kind of am thinking an awful lot about, Kevin, is, Joe Biden saying he spoke to Mitt Romney this morning, and Tim and I were kind of off air just saying, I feel like Mitt Romney can play a big role in, reaching across the aisle here. Understands business, understands the economy, has learned a lot about politics, having run, so I just feel like he crosses a lot of worlds here. Do you think ultimately that we will see the parties reaching across the aisle here?
Well, I think that in a Democratic-led Senate, again, like in the midst of all of this, the Democrats took back control of the U.S. Senate, and that really is an incredibly important thing going forward. It has definitely shifted that balance and does mean that there's going to be more incentive for some of these Republicans to at times cross over and work with Democrats. So it gives Biden a little bit of room to do that, potentially. At the same time, there's obviously the events at the Capitol have also, I think, put really a spotlight on the splits within the Republican Party and a ton of pressure on that party to figure out where it's going to take itself. Is it going to be sort of beholden to the Trump legacy, such as it is, and that view, and try to go and sort of cater to the elements of that party that are very enthusiastic, but have also obviously have gotten. Have some elements within them that are partially responsible for what happened. Or is the party going to go and try to reclaim sort of the legacy of what the party used to be, a small government party, a states' rights party, and all of that, which they've kind of lost in the Trump era.
Yeah, I feel like a lot of soul searching has to be going on in terms of Washington and members of Congress overall. Hey, Kevin, I do wonder, impeachment, is it a done deal? Is it a done issue at this point? We felt like we came in this morning, there were a lot of headlines from Nancy Pelosi and others, certainly looking at ways to maybe either impeach the president, and maybe it's more about thinking about should he try to run again and stopping that. But what are you guys hearing?
There is obviously a ton of pressure within the Democratic Party to proceed with another impeachment process. They really, honestly, don't have quite enough time, as far as anybody can tell, to actually impeach and remove him before the inauguration day. That doesn't really seem like there's just timeline isn't there for that. But there is you can actually impeach people after they've left office. That process is part of the Constitution, and the idea there is one of the punishments related to impeachment is to prevent someone from holding that office again. So they could go through the process to impeach him so that he could not serve again. Again, very unclear he could do that. That would be a very divisive thing to do.
Right.
It would be a very complicated vote for the Republican Party, and it could boomerang back on the Democrats in ways too. And again, Biden keeps talking about wanting to move ahead. He kept talking about the virus. He talked about the stimulus. He talked about his plans. He talked about immigration bill. He talked about all the things that he wants to do. The more time he spends focusing on Trump, the less, and the Democrats spend time focusing on Trump, the less he's going to be able to focus on those things.
I just back to the impeachment thing, because it is just fascinating to see this play out in just the waning days of the Trump presidency. What would have to happen in order for Democrats and a handful of Republicans to agree that they wanted to prevent Trump from running again? Lay that out for us.
Well, they would have to go through the whole process again, where you have to bring articles of impeachment and vote on them, and that would necessitate a Senate trial after a House vote, and obviously a 2/3 majority in the Senate to make that happen. This is not a small thing.
Right.
And
But
so
my understanding is the Constitution doesn't necessarily lay out a timeline, so if they wanted to do it quickly, they could.
Well, yeah, there's not an exact timeline, but it's not quite that simple either, because the Senate is not scheduled to be back in until January 19th, and so and it would it's pretty easy to block that to sort of gum it up. And remember this: Democrats don't control the Senate yet.
Yeah,
and they won't control it until after Inauguration Day, because that is when the vice president casts the tie-breaking vote. That's when the party changes hands.
That is a key point. Kevin, your gem, your whole team you guys have been just rocking it this whole week. So thank you so much. And I hope you have a quiet weekend. Fingers crossed. Kevin Whitelaw, U.S. Government Deputy Managing Editor at Bloomberg News, on the phone from Washington, D.C. Check out everything when it comes to our D.C. team, because they are just unbelievable. So no doubt about it, this is politics once again, one of our top stories. So too, though, is the labor market. And we did point out earlier that the U.S. labor market lost jobs in December for the first time in 8 months, providing the strongest evidence yet of how the surge in coronavirus cases is weighing on the economy. Direct correlation, everyone. And that's why Tim and I keep saying you got to get the virus under control in order to get the economy, the labor market, and everything else when it comes to our economy back on track. Let's see what Irina Novoselsky is seeing. She is CEO of Career Builder, which for more than 20 years has been helping global companies hire global workers. She is with us once again on the phone in New York City. Irina, nice to have you here with us. So what are you seeing? What you're seeing, does it jive with what we saw from that monthly jobs report?
Very much so, Carol. You said it best, and you said we're all waiting and looking for the vaccine rollout and the stabilization of COVID, as that's a key catalyst for getting the stability in the jobs markets. We started to see some of the recovery happen in the summer months and going into fall, and really with this wave around the holidays in November and December, and now in January, we're going to see this sluggishness of the job recovery right now.
How long does this sluggishness stick around? I mean, is this just a question of when the virus goes away, we will see a recovery? I mean, what did it tell you over the summer when certain states and areas did get the virus under control and we saw improvement?
Yeah, it's interesting. In the summer, when you saw some states and some cities pop up, we generally saw pretty good, healthy recovery. One of the things that we're seeing now was because this wave of so many more people are being impacted, employees at companies are being impacted at a much higher level than they have been before, which is impacting productivity. But what we're also seeing is the start and stop behavior in the HR function. If you think about what's been happening in the HR functions, is they have slimmed down because of COVID. They have really been in austere conditions, and now all of a sudden we get the go, let's hire green light, and so they're left with a very reduced staff trying to staff up an entire organization. And then very quickly it's a stop when the pandemic bubbles up in certain cities and states. And so the start and stop has really forced companies to go to third-party resources to help them sourcing. It's one of the biggest jumps in our business that we've seen with HR departments looking for help.
HR, that is interesting. Right. Like, I do wonder where the bottlenecks are going to be. I know as we've gone through COVID, we've heard from CEOs who said, I'm worried too about my employees big time getting COVID, and then I'm looking for workers in order, especially if you're someone who has figured it out, whether it's a e-tailer or restaurant that is, everything is pick up and delivery, like you've got to make sure you've got the workers to meet the demand there. So I do wonder kind of where the bottlenecks, will be. What, again, are you hearing from some of your clients about how maybe this all plays out over the next couple of months? And what are the key factors? I'm assuming it is vaccine. I'm assuming it is those virus numbers coming down.
Yeah, it's everything that you would expect, Carol. But what we're seeing also is this parallel effect of the unemployment numbers that we talk about on a weekly, monthly basis. But for the existing employees, companies are also spending a lot more time on navigating that. So one of the things we talk about a lot with our clients right now is culture, especially with all of the news happening around us. How do we really help create this protective layer for our employees to keep them focused and positive and have a place to have some positivity in their work life and not see everything that is happening around us, whether it's political and health and just all the return that we're trying to build into our economy. And a lot of what we're seeing is tools of engagement for employees, culture building tools, brand building tools. And so that has been spiking for us. And then the other thing that we're really seeing, and it's exciting to see that this conversation is continuing, and it's around diversity. It is not a one-trick pony where we've seen historically where people talk about it and it dies out. We're continuously seeing companies talking about it. And one of the things that we're so excited, given the diversity of Career Builder, is to help our clients power up and pipe for diverse talent. And so what they're doing now is actually building a pipeline so that when that
hallelujah, right? Because that's what it comes down to.
It's time. Definitely. And it's time. And you know what? It's more than a conversation. We're now seeing our clients take action. They're asking us, how do we get access to the diverse talent? How do we recruit for the diverse talent? And sometimes it's materially changing hiring practices. One of the things we are advising is to start looking for skills and not experience, because a lot of times when you're focused on 100% experience, you're hiring the same person for the same role over and over again.
That's a really good point. Hey, listen, thank you so much, and thanks for going with the flow with us today as we were covering President-elect Joe Biden. Really appreciate it. Irina, have a good weekend. Irina Novoselsky, she is Chief Executive Officer at Career Builder, joining us on the phone in New York City. All right, let's get back to world and national news. Let's get another check on your top business headlines. Let's turn things over to, once again, Charlie Pellet.
All right,
hey, Charlie.
thank you very much. Well, hello there. 28 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ, all advancing, stocks climbing to records after President-elect Joe Biden said he'll be laying out details of trillions of dollars in further aid to bolster the economy. You heard his remarks live right here on Bloomberg Radio. S&P now on track for its fourth straight day of gains, led by retailers and real estate companies. NASDAQ 100 outperforming, Tesla surging for an 11th straight session. Tesla up now by 6.7%. NASDAQ 100 index up 1%. NASDAQ Composite Index up 93 points, up 0.7. S&P up 13, up 0.4. The Dow up 12 points, up by less than 0.1%. 10-year down 10/30 seconds. 10-year yield 1.11%. Gold down 1.5%, 18.46 the ounce. Crude rallying 3%, 52.37 a barrel. The UK has cleared Moderna's COVID-19 vaccine, adding a third shot for emergency use against the pandemic as infections surge. Moderna shares, they are down today by 2.2%. The jobs report showed soaring coronavirus infections exacted a bigger toll on jobs and jeopardized the economy's progress. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health.
As we move to immunizing the population, we're going to have to scale up at a tremendous rate. Hundreds of thousands. It would not be surprising for me to hear millions of people getting vaccinated on a weekly basis, if not faster, because we're going to have a small window of opportunity during this spring and summer to increase the number of people who have immunity that'll help us in the fall deal with a potential resurgence like we're seeing right now throughout many of the places in the Northern Hemisphere.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Again, recapping equities higher, S&P up 14, up 0.4. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thank you, Charlie Pellet. This is Bloomberg.
Kim Bassine, because Kim Bassine of Bloomberg Pursuits here.
I love Kim.
So Kim is amazing, and he has. Did you see the video that he's been sending around on Twitter?
No.
Okay, so do you
I'll
follow?
find it.
Do you follow Kim?
Oh, Kim and I go way back. I've been following Kim for years.
Okay, so anyway, it's a video. Dave, I'm stealing your thunder, but it's a. If you listen, there's this wonderful voice in there that is the one and only Charlie Pellet, Dave.
That's right. It's a band called AJR. The song is called Bang. And actually, this week, the band put up a video that talked about the making of the song, among other things, how they got Charlie Pellet in to do that bit of verbalizing, shall we say.
I mean, is Charlie around? Is he busy right now? I guess he's
Nah,
busy.
I'm here.
There he is.
Come on.
I'm always here.
How can you...
Sooner or later.
I don't see you, Charlie. Where's Charlie?
How can you sound defeated? How cool are you? You are just so cool.
You're very kind to say that.
Does your son know how cool you are?
No, my son hates me. You know, it's like,
That's
he's a teenager.
teenagers.
Right? Exactly. Yeah, you know, it's listen. I do anything I'm asked. What can I tell you?
No, can we just... So they came to you and they're like, Charlie, we want you to be in our video? Or what? Like, what was that?
Well, that's part of the story. I mean, they laid it out in the video. It was a fantastic concert. It's a band I've been following for a long time. My son knows them very well. He turned me onto them, and you know, one thing led to another, and next thing you know, we're reaching out and recording lines. So
Okay.
that's it.
I've been sending
Okay,
out...
that's cool.
It's totally cool, and I want to know what your garage band is. But think about that, because right now we got to get to Dave Wilson and his chart of the day. Dave, what do you got?
Yeah, I mean, the song kind of fits because it talks about, going off with a bang, and certainly we've seen that in the stock market when it comes to the shares of smaller U.S. companies. And it's a trend that Manish Deshpande over at Barclays picked up on. He's a strategist there focusing in on, U.S. stocks. And, he looked at specifically a couple of ratios going back to the beginning of October. And they both tie into the S&P 500. One is for the Russell 2000 index relative to the S&P 500, and the other involves the S&P Mid-Cap 400. And either way, I mean, you have seen a real show of strength over those 3+ months. We're talking about the ratio between the Russell and the S&P 500 going up 23%, and the comparable ratio for the Mid-Cap 400 up 15%. And so when Deshpande looks at this kind of performance, he can't find anything comparable going all the way back to 2000. So, and when you start talking about comparisons to 2000, I mean, it's understandable that people would get a little jittery.
Right.
I mean, given the fact that the bull market ended that year. His take is simply that, these stocks are, as he put it, ripe for a breather. So if
I'll take a breather. You can have a breather, and then you just kind of go back up again.
Yeah, absolutely. I mean, you were talking about that earlier with Tesla, Carol. I mean, anything is possible. And actually, Deshpande is kind of thinking in those terms because, he still likes the smaller companies for the year. It's just a question of how fast they've moved and how short a period of time they've made the move. So that's the concern here. Shall we say more tactical than strategic in terms of a recommendation? In any case, if you want to know more, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Don't know if we've lost Charlie, but I'm thinking his garage band, Charlie P. in the Underground, which is paying
That's a
homage
good
to
one.
his heritage.
Yes.
Right?
If you've ridden the New York City subway,
correct.
You know Charlie Pellet.
Right.
But
come on, Charlie. What do you want your garage band to be? Come on.
Master and the Pellets, who knows? I
Wait,
gotta give
what
that
was
some
it?
thought. Master and the Pellets, who knows?
I
I
play a mean tambourine. I'm just going to tell you.
My suggestion was stand clear.
Stand clear.
I like that. But, I got to tell you, I love what I do here on the radio. I mean, that's my number one calling around here. It really is. So that's...
There's room for both.
There you go.
You're our favorite voice here, no doubt about it. All right. Dave, thank you. Charlie, thank you. Right now, let's get back to world and national news. Also an amazing voice, Nancy Lyons. Hey, Nance.
Thanks, Carol. Well, President Trump will not be attending President-elect Joe Biden's inauguration January 20th. He made the announcement in a one-line tweet today. Trump did release a video last night, though, saying there would be a smooth transition of power. Well, President-elect Joe Biden says it's a good thing Trump's not showing up for the inauguration. But as for Vice President Mike Pence, Biden says he's more than welcome to come.
As much as we can stick to what have been the historical precedents of how and the circumstances in which and administration changes should be maintained. And so if the vice president is welcome to come, we'd be honored to have him there.
Biden says it's up to Congress whether to impeach President Trump for his role in the attack on the Capitol. Well, the U.S. Capitol Police Force, which was overrun during Wednesday's breach, received $516 million for their fiscal 2021 budget, and that has investigators asking some questions.
The inability of Capitol Police officers to stop the mob from storming the Capitol raises concerns about security at President-elect Joe Biden's inauguration in less than 2 weeks. So the probe is moving quickly. Appropriators responsible for the police budget are focusing on oversight, and the police union head says it was a failure to prepare, not a lack of resources. He blames dysfunction and leadership's lack of communication with rank-and-file officers. Capitol Hill Police Chief Stephen Sund has already resigned. In Washington, I'm Amy Morris, Bloomberg Radio.
Richard Barnett, the man photographed inside House Speaker Nancy Pelosi's office during the siege, is now in custody. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. Carol Massar, along with Tim Stenovic, Bloomberg Quick Take, my co-host. Elon Musk, man, it's, again, just our first week, of the new year, and we have already, I feel like, every day talked about Tesla and Elon Musk.
Well, we have to. I mean, it's a story. As Dave told us earlier today, it was responsible in, a certain sector today for a big part of the gain that we were seeing, at least earlier in the day. Tesla's, like SpaceX, a rocket ship.
It is. And you know who benefits by that?
Well, the biggest Tesla shareholders, including Mr. Elon Musk himself.
Winner, winner. Elon Musk, he's the world's richest person right now. And what's really wild is if you go back a year ago, if you go back a couple of years ago, remember when he was like smoking pot on the radio?
Oh, yeah, on the Joe Rogan show. That's right. I had forgotten about that.
Tweeting things about financial state, things, and as he's who would have thunk? Although Kathy Wood of ARK Investment would have thunk, because she has been behind him, talked about, the rise in the share price. She's been spot on with Tesla for years about him. But he is the world's richest person, and it has to do with the share price and what we've seen up in terms of the stock moving up this year. Also last year, he's worth, listen to this, $194.8 billion, or $9.5 billion more than Bezos. Take that, Jeff.
Jeff Bezos held the title of world's richest person since 2017, and it was just this week that he was passed by Mr. Musk. $165.5 billion Elon Musk has added in terms of wealth just in the past year because of Tesla's wild rise.
Oh, yeah, like the rest of us.
Yeah.
Do you think Jeff Bezos gets home and, I don't know whether the puppy's home or the girlfriend, I don't know who's there, right, to be honest, but is good day? He's like, no, bad day. I'm not the world's richest anymore.
I don't know.
Sorry.
I have no idea.
I'm kind of going a little crazy on everybody.
It would be cool to
still be the second richest person in the world.
Yeah, it'd be fine. I mean, Bill Gates is fine and Warren Buffett, they're fine. They're okay.
Exactly. Anyway, Elon Musk, Tesla, already big story in 2021.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Dow, the S&P, NASDAQ solidly in the green. In fact, we have got the S&P 500 index trading at or near the session high. Let's head right over to the first word breaking news desk for today's afternoon call. And here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks are choppy today, but like you said, in the green, and it's been a strong day for the FANG stocks. Dow is currently up 56 points, S&Ps are up 20, NASDAQ is up 0.9%, and FANG stocks are up 2.7%. The U.S. 10-year yield at 1.11%. Gold is plunging down 3.5%, and transports gained 80 points. Among the main 11 S&P sectors, leaders were consumer discretionary and real estate. Materials and industrials led to the downside. And leaders to the upside in the Dow, Coca-Cola and Amgen, while 3M and Verizon led to the downside. In other news, Bitcoin hit nearly 42,000. Las Vegas Sands is said to discuss a push into sports betting, and Roku gapped to a record after buying more content. Wrapping things up, Tesla climbed another 7% to a new record high and rose for an 11th day. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. Have a great weekend, and to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, folks, just about 11 minutes to go until we get to the final trading day and the final closing bell for the first full trading week of 2020. Let's get to our drive to the close guest. Jeff Krumpelman is back with us, Chief Investment Strategist and Head of Equities at Mariner Wealth Advisors, based in Cincinnati, joining us on the phone from there. Jeff, first of all, Happy New Year. Nice to have you here with Tim and myself. How are you?
Doing well. Happy New Year to you as well. I hope things are going well in the new year in New York.
Yeah, fingers crossed. It's already been, safe to say, a tumultuous week, as you well know. How do you, Jeff, we turned the calendar page, but a lot of the old problems are still with us, right? COVID, of course, and trying to get the vaccine out, and we're all just kind of keeping our fingers crossed that we get to some kind of normalcy at some point in 2021. How do you see it, and how does it ultimately, impact companies, the economy, and ultimately the financial markets? Because we continue to see this disconnect where there's some pretty terrible headlines, and yet markets have often rallied.
Yeah, there is a disconnect between the headlines and the market, and yet there's not that much of a disconnect between the economy and the market. The economy has continued to recover, and I think that it's the earnings and credit spreads and interest rates that are the things that we really monitor and that drive the market. And from a human nature, or just a human standpoint, you would have hoped that the news would be about vaccine introduction and onward and upward here, as opposed to seeing the Capitol and some of the things that just happened the other day that were absolutely shocking. And so there's depression from a human standpoint from that. But with regard to the economy, as we've seen it many times before, and we certainly saw it going back into March of last year, headlines about pandemics and COVID spread, and yet we are up 18% roughly in 2020, and who would have thunk that? And it was because, the market's forward-looking and it's all recovery, and that is actually why we maintained that hold-your-ground view, and we maintained our stock price target levels for the S&P 500 when many were taking it down, because we look at the data.
Well,
and that's what drives us.
Well, speaking of that data, we did see the job recovery falter today as the virus surge just snapped the hiring streak. How did your opinion change, Jeff, about the recovery when you saw that news this morning of the jobs report from December?
Well, actually, it's kind of mixed information. You had, numbers that were revised up for the prior 2 months, and they pretty much offset the disappointment for this month. But our expectations are really for a soft Q1 anyway. We're in the midst of kind of a soft patch in here where the vaccine has not been distributed in mass scale. There was a little hesitancy to know what would happen with fiscal stimulus and would that come about. And while CEO confidence has been improving, we expected a bit of a softer patch here in Q1 before you do get kind of continued and accelerating improvement throughout the remainder of the year. And at the end of the day, because of some pretty other solid economic numbers are expected to be up 20% over this next year. And I do think that we'll deliver there or close to it. You're going to see a pretty nice, I think, year for the market. Not dazzling returns, not stellar returns, but to see high single-digit returns, including dividend. That's kind of what we're looking at.
Hey, so Jeff, where would you be putting money? Because I know our audience loves to hear specifics, and I was looking at some of the stocks that you shared with us. Starbucks, Target specifically are some of the names that are up on your list. Talk to us about kind of your investment thesis and where you would specifically put money right now.
Yeah, I think positioning is really key in here. And we felt good about it last year. Many people are saying, hey, run to value, run to the cyclicals. And they're making more heroic, extreme kind of recommendations on where you should go. And we just don't think that that's probably the thing to do. We still think a blend of growth and value. So we have a bit of what people would call a barbell strategy. We're maintaining our growth positions, and examples of stocks that we see in that growth camp. It's not just FANG. We have exposure to the FANGs. We reduced them a little bit after some success there. And it's stocks like 2-6, which makes silicon carbide that is used in making the wafers and the chips that require greater and greater just really speed and efficiency for power management and so on and so forth. Names like Micron Technology, which makes memory chips used as a cloud is built out and we move to more and more data center and cloud-oriented applications. We like also within technology, Viva is the name of the company. It's a healthcare software company that just dominates the CRM component within healthcare and software that's used to manage all these trials that are going on for the vaccines and drug development and so on and so forth.
Right.
And we find when the cyclical camp, too, by the same token, we like, names such as L3 within the defense area, Federal Express. And so we think that you ought to really have balance between those two right now.
Yeah, so...
Yeah, Alibaba's on this list, too. Why Alibaba?
And just got about 30 seconds.
30 seconds, I'll try and make it quick. Alibaba is just really, hey, sometimes things get cheap and they get too cheap. And, this might not be for the meek and timid, if you will, at this point in time, but it's trading at less than 19 times earnings when the S&P 500 is trading at 22 times. It has expected growth rate of 23 times. And we just don't think with the Chinese government, yes, they're playing a little tough and would like to quiet Jack Ma down just a little bit, but they also want to court and see Western investors really continue to invest over there. And so we think that this is a good entry point.
Stock's down about 25% since its October high, so we've definitely seen it pull off its best levels of the last 6 months or so. Jeff, thank you so much. Really appreciate it. Jeff Crumpleman, Chief Investment Strategist, Head of Equities at Mariner Wealth Advisors on the phone in Cincinnati. We've got the closing bell coming your way in just about 3 minutes' time. This is Bloomberg.
Bloomberg World Headquarters. I'm Charlie Pellet. There you have it. Sound of the closing bell clanging at the New York Stock Exchange as we wrap up trading on this Friday, January 8th. Folks from Allianz Life Insurance ringing that closing bell. The Dow, the S&P, NASDAQ all moving higher, picking up steam into that closing bell there. S&P up 20 on the day, higher by 0.6%. The S&P closing at the best level of the day. The Dow up 56 points, up by about 0.2%. NASDAQ up 134 for NASDAQ. That was a gain today of 1%. 10-year down 9/30 seconds, 10-year yield 1.1%. Gold 3.4% lower today, dropping $65 the ounce at $18.48. And West Texas Intermediate crude higher by 3.3%, up $1.70 a barrel, $52.53. Stocks climbed to records after President-elect Joe Biden said he'll be laying out details of trillions of dollars in further aid to bolster the world's largest economy. S&P on track for its fourth straight day of gains. And as we wrap up the trading week, S&P up this week by 1.8%. As for the market backdrop, Jeff Crumpleman is Chief Investment Strategist at Mariner Wealth Advisors. He was our guest moments ago right here on Bloomberg Business Week.
The market's forward-looking, and it's all recovery, and that is actually why we maintained that hold-your-ground view, and we maintained our stock price target levels for the S&P 500 when many were taking it down, because we look at the data.
Tesla up for an 11th day today, longest winning streak after Evercore ISI removed a sell rating on the stock for the first time in a year. Tesla shares up another 7.8% today. Year to date, this very young 2021, Tesla is up by 24.7%. All passengers arriving in the UK will be required to prove they do not have coronavirus, showing a negative test result taken within 72 hours of the start of their journey. Recapping, S&P up today by 0.55%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Nobody move a muscle. Bloomberg Business Week. Movers and shakers.
Damn, Stiffy, you got some moves.
On Bloomberg Radio.
Speak about some moves. This week alone, our first full trading week of 2021, and you'd think that everything's okay, but it's not, as we know. We're definitely going through political gyrations this year, and of course, what happened on Wednesday with the breaching of the U.S. Capitol. Getting ready, though, for a new administration. Interesting to hear from Joe Biden in that first press conference from since Wednesday, Tim, but really, our own Kevin Whitelaw saying he's focusing going forward. I feel like my husband's like, you can't go back. You got to look forward. You got to just think about moving forward. And that's exactly what we got from Joe Biden.
That's kind of been his message during the whole transition. Despite what we heard from the president, his focus was on getting the transition going. And I think it looks, look, I'm not going to say anything paid off, but it seems to be a good strategy for Biden and his team.
And I think, listen, Americans are looking for okay, so how do we get through this, and how do we move forward? Having said that, the equity markets in particular I'm looking at, there often has been this disconnect between kind of what's going on in the world more broadly and what's going on Wall Street. Small caps alone were up 6% this week. The Dow was up 1.6%. The S&P was up 1.8%, and the NASDAQ was up 2.4%. This, as we've seen a record number of cases in terms of daily cases of COVID. We continue to see the spikes, and we continue to see the strains, certainly on our healthcare system.
The market and big parts of the market absolutely shrugging off the chaos in Washington this week. And like you said, like Joe Biden, looking forward.
Yeah, exactly. So let's see what our Bloomberg News cross-asset reporter Sarah Ponczak has to say. She's been with us throughout the week on this. Sarah, I do look at the S&P 500, though. Kind of an even split. 250 names higher, 244 lower, 2 unchanged. So it's not like it was everybody buy everything today.
Right, not today, but we do have to keep in mind, like you said, the amount of gains that we've seen over the week. Also, the S&P 500 up for a 4th straight day today. Yeah. That's your longest streak since November 5th. So a period of time that encompassed the presidential election, which was quite a while ago. So we still saw plenty of enthusiasm this week. Stocks closing at record highs. The S&P, the Dow, the NASDAQ. We did see a cooling off of small caps today, but really not very large considering, like you said, the 6% weekly gain that we did see. Now, what was interesting today, though, was that there was a bit of confusion, a bit of headline confusion. So there was some headlines that came out throughout the trading day. Senator Joe Manchin of West Virginia saying that maybe he was not in favor of more stimulus checks. Well, then his team did come out and kind of they just pointed out what the situation truly was. Right. They said that the team was still assessing the need for more economic stimulus and more so just looking at what the number one
assessing. I feel like he was pretty definitive. Sarah, don't you feel like he was pretty definitive, though? It's like, here's what we need. And you did see the markets move around on that.
Oh, absolutely. We saw the S&P 500 turn negative at a time when we saw the initial headline drop. But when the headlines came out and the story came out saying this is what he actually said, this is what he actually meant, we just saw them completely come back. And you saw benchmarks close at record highs.
Wow. Sarah, what about when it comes to these individual equities that you're keeping an eye on today? Because it seems kind of like Groundhog Day every day when it comes to the stocks that we're talking about that are making big moves. Tesla.
It really does.
Yeah, Tesla and Plug again?
Tesla up for an 11th straight day. That's your longest streak on record. And quite amazing. The best performing stock in the S&P last year, of course, it was added towards the end of the year. But Tesla's your third best performing stock already in 2021. So the hot streak has certainly not cooled off. At the same time, you look at Plug today and just off to the races once again. Today up 14% about. That's after being up 35% yesterday. That brings your year-to-date return already in a matter of just 6 trading days to almost 60%. So
yeah,
fiery returns. It's from every single day. You can't help yourself but talk about it because it really just catches your eye.
Does it make sense? Have you looked at the balance sheet?
I mean, many would say no, it doesn't make sense. But when you have a lot of momentum behind a stock, and that's what how people will describe this, is that you have a momentum trade going on.
The revenue growth has been pretty remarkable at this company, and but I just you gotta wonder, right?
And there was news yesterday that there was going to be a $1.5 billion investment, and that also helped this market cap of the company really just grow ever more. So there has been news. However, you look at the sheer size of the move day to day, and it's really remarkable.
All right. Well, listen, kiddo, thank you so much for being there for us all week on what's been really a fascinating first trading week of 2021. You have a good and safe weekend. Bloomberg News cross-asset reporter Sarah Ponzak. This is Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door, it's Dave. Who? Dave.
Hey, Mr. Wilson!
Hey there, Mr. Wilson. Happy Friday to you. And, Happy New Year. We can still say that, I think, for a few more days. Dave, what's the stock of the day?
New Relic, Tim. It's a supplier of internet-based software that monitors the performance of websites and computer applications. Now, the company was founded in 2008 by CEO Lou Cerne. That's Lewcirne. And the corporate name is an anagram of Cerne's name. Clever, huh? New Relic went public in 2014. The ticker is NEWR. The company shares rose almost fivefold to set a record in July 2018. They gave back most of the gain through last March and have struggled to recover since then. Now, New Relic made up a chunk of the loss today after an update on recurring revenue, which comes from software subscriptions. The company said recurring revenue last quarter surpassed its forecast and predicted revenue for the fiscal year ending in March would too. The update was given along with news of a management change. New Relic appointed Chief Product Officer Bill Staples to succeed President Michael Christensen, who's stepping down. These developments sent New Relic shares to their biggest gain in more than 6 years. They climbed almost 16%.
That is just funny what he did with the name of his
I know. I was wondering why, Dave. I was wondering why you were spelling the name.
I knew you were going to wonder that. And then I also knew.
And then I spent the rest of the time.
You'd figure it out.
Well, I spent the rest of the time trying to make the anagram in my head. So.
Do you know the New York Times has that great spelling bee thing? I don't know.
Yeah,
I am
my
obsessed
wife
with
loves
it. Well, I love your wife already for that. I am obsessed, and my family's like, okay, where are you? I'm like, I'm at genius level. I got
there. It's like what she does on her phone all the time now.
I love her. Tell her I'm on the same page. Dave Wilson, you have a really good, safe weekend. Tim, you're going to leave me.
I will, but not for long.
Not for long. I'll see you back on Monday.
Thanks.
Have a great, safe weekend.
You too. Thank you.
All right, folks, you are listening to Bloomberg Business Week. Let's get another check on world and national news. For that, it's over to Nancy Lyons in D.C.
Thanks, Carol. President Trump confirmed in a tweet today he will not attend Joe Biden's inauguration January 20th. This is after he released a video last night in which he promised a smooth transition of power. Democratic Senator Chris Murphy of Connecticut talked about that today on ABC's The View.
He goes on TV in what looked like a hostage video last night and says that he understands that Joe Biden is going to be president. He's going to be involved in the transition of power peacefully. And then he comes out this morning and says, but I'm not showing up to the ceremony, which again is this sort of quiet indication to those that are still plotting and planning a rebellion against the U.S. government.
And what does President-elect Joe Biden say about Trump's decision not to attend?
I was told that on the way over here, that he indicated he wasn't going to show up at the inauguration. One of the few things he and I have ever agreed on.
Biden says he welcomes Vice President Mike Pence for the ceremony. And as for possible impeachment of President Trump, Biden says he'll leave that decision up to Congress. Acting Deputy Homeland Security Secretary Ken Cuccinelli is addressing the violence at the U.S. Capitol this week and tells CBS the government is looking at what went wrong.
The problem, of course, is the initial breach, and there was no backup behind that. And it does appear that there was inadequate preparation and numbers by the Capitol Police. They were overwhelmed by a few hundred folks.
The head of the Capitol Police Force has resigned. Global news 24 hours a day on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week and the one and only Charlie Pellet, who also has his own band, apparently, and is in music videos. My God, you're like the Renaissance man.
Well, no, you forgot to mention the helicopter, too, that I'm now taking between Westchester and New York City.
Why not? I mean, can you, Amanda Gordon, thank you, first of all. Everybody should read everything by Amanda Gordon because she is with the powerful and the rich all the time. And she talks about this 12-minute, $175 helicopter commute option. So I don't have to take the path. I don't have to take the subways, nor do you.
Well, the answer is
Maybe.
I don't think I would. Listen, I like helicopters. I like helicopters
Do
when
you
I'm
really?
Yeah, when I'm in a place like
if the
Hawaii,
engines,
I love helicopters.
Can I tell you I've been in a helicopter a couple of times, but the engines fail, man. There's no gliding off of that one. I'm just going to say.
I try not to think about those things. But listen, would you take the helicopter from New Jersey into Manhattan if such a service was offered?
First of all, it's really pricey, and I don't know about what's the carbon footprint of that puppy. I'm just going to put it out there. I like mass transportation, to be quite honest, when it's not a COVID world.
And I agree with you. Listen, taking a car service in from Brooklyn across the beautiful Brooklyn Bridge and up the
Sweet,
wonderful
right?
FDR Drive at dawn, it's a nice experience. That said, there have been times when I sit in the back of a car grumbling because it's taken me longer than if I jumped onto the 2 or 3 train and took that into Manhattan from Brooklyn.
See, people, we're learning more and more about Charlie Pellet. He's in music videos, and he also apparently grumbles in the back of cars. I'm just going to say.
No, but, sitting there in traffic, I might as well have taken mass transit.
Can I just tell you, though, it's from Blade Urban Air Mobility. We've talked to these folks often over the last few years. Trips of up to 5 passengers with COVID safety protocols will cost $175 each way, I guess, for each person. So, yeah, listen, there are options here, Charlie.
Exactly, but the other issue too is how long does it take to get to Westchester Airport, check-in times, and then ultimately where are you going in Manhattan, and do you still have to deal with traffic once you're in Manhattan?
That's a really good point. I thought we had a solution, Charlie, and there we go. We don't, apparently. All right, Charlie Pellet, thank you so much. Star of everything, apparently. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, developing story after hours. NCR in talks to buy Cardtronics. That, according to Dow Jones. Again, NCR in talks to buy Cardtronics. Stocks climbed to records after President-elect Joe Biden said he'll be laying out the details of trillions of dollars in further aid to revive the U.S. economy. S&P notched its fourth straight day of gains, led by retailers and real estate companies. For the week, the S&P 500 index up by 1.8%, and by implication, year-to-date, the Dow up 56, up by 0.2%, higher by 1.6%. NASDAQ up 134 today, up by 1%. 10-year down 10/30 seconds, 10-year yield 1.11%. Gold down 3.5%, 18.47 the ounce. And West Texas Intermediate crude up 3.7%, 52.73 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, really appreciate that update too. You are listening to Bloomberg Business Week. Carol Massar in our Interactive Brokers studio. So much going on when it comes to China, U.S.-China relations. We talked about China telecom companies delisting and then not being delisted on the New York Stock Exchange. We've seen more bans of Chinese apps in the U.S. There's so much going on. So let's make sense out of it, because we've got to think about it as an investor and maybe what the Biden administration might mean, too, for the environment and what that means for investing there. David Riedel is president and founder of Riedel Research Group. He's on the phone from San Francisco. David, first of all, Happy New Year. Nice to have you back with us. How are you?
Same to you. Happy New Year. We're all safe and well, so that's a plus for this year.
Yeah, absolutely. But I do feel like headlines, fast and furious, still when it comes to anything and everything with China. It's an outgoing administration, but I know the Chinese are a little bit on edge when it comes to someone who is taking over at the White House. We're talking about Joe Biden. He's politically savvy. He understands how this works. What do you think it means for U.S.-China relations, a Biden administration?
Well, I think you're going to have a more rational, pragmatic, and steady course of interaction. I think you'll have more effective diplomacy and discussions. Joe Biden actually gets handed a bit of a gift coming in, because he's got a number of tariffs, of taxes that the Trump administration put on U.S. consumers with regard to China products, that he can start to pull back a little bit, and he can get credit for those advancements. So he's got a number of arrows in his quiver of how to improve relations. I think the consistency of policy and having policy rooted in pragmatic goals will be a huge benefit for working with someone like China, who has a 20, 30, 50-year view, not a 3, 6, 12-month view.
So how does the U.S. need to kind of look at China specifically in your view? Because it's interesting, here we are with kind of some tensions, not tensions, the delisting, not delisting. It's really not been a very clear policy, but it's interesting because at the same time we have seen the Chinese government opening up more and more doors. They're inviting in more foreign banks, insurance providers, other financial services company. They've also been making it easier for foreigners to buy its stocks and bonds. So it's, they obviously want investment dollars coming in, but I do wonder, does that continue, or do you think that, the investment community is getting a little bit more wary when it comes to China? And should they?
Well, they certainly should. I think that Beijing does welcome foreign capital, but on their terms, right? They want those banks to come in on their terms. They want those financial products companies to come in on their terms. And they've gotten to the point where they're second largest economy in the world, the largest by some measures, with the expectation of 8% GDP growth next year. It's a tempting market for people, right? It's large, it's proven, but it's also a dangerous market. I mean, there's, as you mentioned, this question of how are listed companies going to be treated in the U.S. that are Chinese companies? How's that going to happen? At what point will China slam on the brakes like they did recently with Alibaba, one of the preferred ways for U.S. investors to get exposure to to China, and Beijing really cracked down on them. And that is a reminder of the difficulty as a foreigner doing business in China. It seems at the end of the day, the benefits always accrue to the Chinese side. And they do it and they make these decisions on their own timeline, from their own perspective.
Right.
And so you need to be able to get in there, make money from the growth of the Chinese consumer, but also be nimble enough to get out or not cause too much trouble to attract the attention of Beijing.
What do you think the expectations are? What do you think the EU, what kind of pressures, if any, they will put on, considering, the EU just did a big investment deal with China. And, it's been kind of long in coming. It wasn't an easy one to get, but nonetheless, it was done. And it was done before the end of the year, just before the Biden administration would take over.
That's right. And it does really control what the EU can do in terms of it going outside that agreement to put additional pressure on Beijing. Unfortunately, the U.S. wasn't part of those discussions. They should have been. The whole time along, there should have been a lot more coordination among the U.S. and his allies in dealing with Beijing. But, unfortunately, that is an ally now that the U.S. is not going to be able to use to continue to put pressure on Beijing, because the rules of engagement have now been set and are quite narrow between the EU and China.
So something I want to ask you, and I've been thinking about this a lot, David, is we talk so much about Elon Musk and Tesla. I mean, it's just been a banner 12 months for Elon Musk and Tesla. And we talked about him, surpassing Jeff Bezos in terms of wealth. It's just been phenomenal. But the EV market, which is something that Tesla and Elon Musk need, that a lot of the automakers are looking at, China specifically, is developing its own domestic EV makers. And I do wonder, is that the way, now I'm thinking about the investment perspective, is that what investors should be looking at, is like those EV makers? How should they play the Chinese market right now?
I think you need to carefully select domestic players who have exposure to that. I think that if we've learned anything in dealing with U.S. foreign companies dealing with China business over the last 20 or 30 years is, as I said before, the benefits always accrue eventually to the Chinese side. Yeah. So that's great that Tesla's there, proving the upper end of the market, providing some manufacturing there on the ground. That's great. But the winners in the long term will not be a foreign company. It will be a domestic company. So you need to be careful of some of the ones that have ramped up so dramatically in recent years. But there are parts of the battery ecosystem within China that I think deserve some attention. But you need to be careful picking individual stocks, as we've been reminded with people exposed to Jack Ma and Alibaba, how quickly that can turn. And investors will remember back to the early 2000s in Russia, where the government simply accused the leader of Yukos of fraud and stole the company. Well, so you do need to be very careful.
Hey, 30 seconds just quickly, please. Jack Ma, we haven't seen him. Do we need to be worried?
He's not disappearing, but he's sensibly keeping a low profile. I think he probably reappears in the next couple, 3 weeks, and with a very pro-Beijing tone.
All right, David, you're the best. Next time we'll do a little bit more time, because love hearing your insight when it comes to China. David Riedel, he's president and founder of Riedel Research Group, joining us on the phone from San Francisco. You are listening to Bloomberg Business Week. I'm Carol Masser in our Interactive Brokers studio. Coming up, we're going to talk with an interesting guest, co-president of the family office that specializes in innovation. We're talking about Nottingham Spurk. We'll talk about innovation and how that leads to investments.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
This is Bloomberg Business Week. I'm Carol Masser in our Interactive Brokers studio. Coming up, we're going to check in with the co-president of Nottingham Spurk, a family office, but they're all about innovation and their strategy resulting in the creation of products and also a lot of investments. So we'll get to that in just a moment. First up, though, let's get back to your top business stories, some of the news after the closing bell. Here is once again Charlie.
All right, I thank you very much. And here's what's going on. NCR in talks to buy Cardtronics. Right now, this is a Dow Jones report citing sources. NCR seeking to snatch it away from a pair of investment firms, including the private equity giant Apollo Global Management that earlier agreed to buy the ATM operator. But the key headline there, NCR said to be in talks to buy Cardtronics, a story that we are following. The Dow, the S&P, NASDAQ climbing to records today after President-elect Joe Biden said he will be laying out details of trillions of dollars in further aid to revive the U.S. economy. S&P, by the way, notching its fourth straight day of gains for the week, up by 1.8%. The Dow Jones Industrial Average advanced today by 56 points, up by about 0.2%. NASDAQ up 134, higher by 1%. Again, the Dow, the S&P, NASDAQ all climbing to records. 10-year down 11.30 seconds, 10-year yield 1.11%. Gold down 3.5%, dropping $67 the ounce to $18.46. And West Texas Intermediate crude up 3.6%, $52.64 for a barrel of West Texas Intermediate crude. Well, as for the size of potential stimulus, Anastasia Amoroso is head of cross-asset thematic strategy at J.P. Morgan Chase Bank, and she was interviewed this morning on Bloomberg Television and Radio.
There's definitely been a pro-cyclical shift in a lot of people's outlooks, including our own, and this is based, of course, on the Democratic sweep and the expectation of, we think about $750 billion in terms of the next phase of the COVID relief package. So that's roughly what we're expecting, what consensus is expecting. And I think most people expect that to be passed pretty quickly once the new administration takes place.
Equifax has agreed to acquire Count Inc., which offers fraud protection for e-commerce retailers for $640 million. Transaction is expected to close in the first quarter. Shares of Equifax today did climb by 2.6%. Tesla up again, another record, up 11 in a row. Tesla advancing another 7.8%. Recapping, S&P up by 20, higher by 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Really appreciate that. So I want to get right to our next guest because really interesting in terms of the work they're doing it. And we've said it a lot on air. We've talked about how disruption, times of stress and strain lead to innovation, and our next guest is really all about that. He and his family office hold over 1,300 patents, of which 95% have been commercialized, including the Crest Spin toothbrush and Swiffer Sweeper Vac. So let's bring in John Nottingham. He's co-president of the family office. It specializes in innovation. Nottingham Spurk is the firm. He also serves on the boards of the Cleveland Clinic Board of Trustees, Case Western Reserve University's Tech Commercialization Board, and a lot more. He joins us on the phone from Cleveland, Ohio. John, first of all, welcome to Bloomberg. So nice to have you here. How are you? And Happy New Year.
Well, Happy New Year to you, Carol. Thank you for having me.
So tell me, before we get into some of what you guys are doing, is how the last 12 months have been for you and the past week, because I think as a leader, we've just seen, and as an investor, one tough headline after another in the last 12 months and certainly this week. So I'm curious kind of how you see it, how you process it, and how you think about, the work that you do.
Well, you look at the current events and you look at the world at face value and you say, look, how does that affect me? How does it affect my partners, clients, and coworkers? And you look past the noise and you look for opportunity. And there is opportunity in disruption. So that's what we're focused on.
Well, tell me in terms of the disruption you're seeing and where that has led you in terms of innovation and opportunities.
Well, we have the core of our firm here is a product innovation firm. So we are vertically integrated to have, insights and design and engineers and prototypers all at one location in Cleveland, Ohio. And when we see an opportunity, we grab it. So I'll give you an example. As soon as the pandemic hit, we said, okay, where's the demand for product? We saw hand sanitizer. Well, great, hand sanitizer is great, but one of the problems is you have to touch it to dispense the product. So who's touched it before that? So what we did is we fast-tracked a product into the marketplace that's hand sanitizer, but you don't have to touch it. It just dispenses it right in your hand.
That's pretty amazing. How were you able to quickly do that?
Well, because we're vertically integrated, we have all the engineers and designers and people, and we can just fast track it. We grab a factory, we get a launch partner, and we just launch it. So if you go into Lowe's right now, as an example, we launched at Lowe's. They bought everything that we could produce, and they're stacked to the ceiling at Lowe's, and then we're going to roll it out to other retailers as soon as we can catch up with the demand. But we've sold this didn't exist in March, and we're making millions of product right today.
Yeah, it's pretty fascinating because we focus so much. We've been talking a lot about EVs and autonomous vehicles. It's innovation often leads you to very, very high tech stuff, but sometimes it's just some very simple solutions like what you guys are working on.
Oh, it could be low tech. For instance, we work with a number of portfolio companies that have product, and they have margin issues. Well, we could go in and take a look at that product, tear it apart, and put it back together and deliver twice the margin they had before. Keep the price, but the margin's multiplied. And so those are the kind of, we have to react, we have to pivot, we have to be nimble, and we just have to react to the market as we see it today, not as we saw it yesterday. Your customer today is different today. They're thinking different. They have different pain points.
Right.
And if we can react to that before anybody else, we win.
John, we're going to take a break in a moment, but we've got about 45 seconds here. What has changed about the consumer in the last year that you think really stays with us longer term?
Oh my goodness! I mean,
where should I begin?
The ways. Yeah, first of all, everybody's at home. All right, guess what? There is a boom in home products. I can tell you specifically after the break, but there's a big boom in home products, believe me.
All right. Well, we're going to continue the conversation. Sit tight for a second because I do have to do a little bit of news, but we're going to come back with John Nottingham. He's co-president at Nottingham Spirk on the phone from Cleveland. I also want to find out because they recently opened up a big innovation hub in Cleveland specifically, which is where he is, and they're doing an alliance with Ernst & Young EY, and that is opening this spring, so we'll get into that in just a moment. You are listening to Bloomberg Business Week on this Friday. Just a reminder, since we wrapped up quite a trading week where we saw gains of 1.6% in the Dow overall, 1.8% higher. Oh, no doubt about it, considering the volatility on the general news front. All right, let's get back to world and national news. Once again, here's Nancy Lyons.
Thanks, Carol. President-elect Joe Biden says he is perfectly fine with President Trump not attending his inauguration, especially considering what happened Wednesday at the Capitol. Biden is once again placing blame squarely on President Trump.
He's been an embarrassment to the country, embarrassed us around the world, not worthy to hold that office.
Biden spoke as he was introducing his economic team and several of his economic proposals. Biden says he will lay out his proposals more completely next Thursday. He says they'll include providing more stimulus to Americans in the form of direct payments. He says it's necessary, especially in light of today's jobs report showing a drop in payrolls for the first time since April. House Speaker Nancy Pelosi says she has spoken with senior military officials about President Trump and the safety of the nuclear codes in his remaining days in office. She also says Congress will move to oust President Trump from office if members of his cabinet do not invoke the 25th Amendment. Iona professor and Bloomberg contributor Jeannie Zaino says the best option for Trump's removal may be resignation.
Respected Republicans, Mitch McConnell, Mike Pence, Pompeo, people that he respects, his children, family, need to go to him and make this happen. That is the path forward. I have a hard time believing at this point that Pence will invoke the 25th, and it is just incredibly difficult to imagine that they could get an impeachment and a removal done in 13 days.
The White House has released a statement on possible impeachment, saying it would only further divide the country. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. It has been quite a week. I talked about the market run-up, certainly, that we've seen despite what happened in Washington on Wednesday. We were able to catch up with former U.S. Deputy Secretary of Labor Chris Lu, who is on President-elect Joe Biden's transition team. He also was executive director of Barack Obama's transition team back in 2008. He is one of our Business Week weekend show excerpts and highlights. In this little clip of the interview that we did with Chris, he talks about that violent protest that we saw on Wednesday at the U.S. Capitol. Check it out.
And to see those people storming in as easily as they apparently did, causing the kind of havoc, disrupting the proceedings, it's, you know, we keep saying this is not who we are as Americans, but it clearly is. And I think it's going to require a lot of soul searching about how we got to this point.
How does the country move on from this? Where do we go from here?
You know, I think the president-elect Joe Biden sent the right message yesterday. You know, he's continuing to talk about healing, you know, really going back to the beginning of his campaign, that this was a battle for the soul of our nation. I think he is going to try to obviously take the temperature down on the rhetoric, notwithstanding the fact that he's going to control both the House and Senate. He has indicated he's going to continue to work for bipartisan solutions. But I think we need to recognize that there is a very strong anti-government it's not just anti-government, anti-all institutions undercurrent in our country right now, and that just continues to fester, and that's been a long-term problem in this country.
And that is certainly something that we're going to have to see President-elect Joe Biden tackle with his team. We should point out that, of course, was Chris Lu, former U.S. Deputy Secretary of Labor, Chris Lu, during the Obama administration. He's also on President-elect Biden's transition team, helping specifically with the Labor Department. And that was Chris Lu speaking with myself and my co-host, Tim Stenovec. You can hear more of that on our Bloomberg Business Week weekend show. You are listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're learning more details about the NCR Cardtronics tie-up. NCR, first of all, in talks to buy Cardtronics. Cardtronics previously agreeing to a sale to Apollo for $35 a share. Cardtronics earlier said it got a new offer at $39 without naming NCR. Dow Jones initially breaking word that NCR was in talks to buy Cardtronics. The Dow, the S&P, NASDAQ head into the weekend after the first trading week of 2021 on a bullish note. Records across the board today, stocks climbing after President-elect Joe Biden said he'll be laying out details of trillions of dollars in further aid to revive the U.S. economy. S&P notched its fourth straight day of gains. S&P up today by 20 points, up by about 0.5%. The Dow up 56, up by 0.2%. NASDAQ up 134, up by 1%. 10-year down 11.30 seconds, 10-year yield 1.11%. Gold down 3.5%, plunging $66 the ounce to $18.46. West Texas Intermediate crude up 3.6%, $52.67 a barrel. Got to mention Tesla up 11 in a row, another record there, up 7.8% so far this year. Tesla up 24.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. I want to get right back to John Nottingham, co-president of Nottingham Spurk. It is a family office. It specializes in innovation. John's still with us on the phone from Cleveland, Ohio. It is really fascinating to read about kind of what you're doing, John. And I think, we think about investing in so many different ways, obviously directly through the markets. You can go into a venture fund, an angel fund, but you guys really are there, in the thick of it, creating the innovation. How does it all work? How long does it take for you to create something that ultimately a P&G or, another big company, sees it and says, okay, we want to run with it. There's a product here for us. How does it work?
Well, it all starts with the customer. You look at the customer, and like we said, today's customer is thinking totally different than that customer was a year ago or 6 months ago.
Yeah.
And you've got to sort of tap in. So we bring customers into our innovation hub, into our center. We have a focus group. We watch them through a two-way mirror today, and we say, what is their pain points? What are they thinking about? What do they want? And then we have our engineers and designers watching them, seeing the twinkle in their eyes, seeing their body language. And then we run downstairs and we build it. We design it, we build it, we put it together, we fast track it through a factory, and we get it in that customer's hands as quickly as possible. You got to strike while that iron's hot and be the first one out there.
I have to say, there's a listener who's hearing our conversation says, you got to ask him about Polar Delight. This is another thing that you guys were involved in, correct?
Oh yeah. So we've invented a new way to consume premium ice cream. Okay, it's not out there yet. We're working on it. We're fast tracking it, and it is going to change the way people think about ice cream. The same way that Keurig and Nespresso changed the way people think about coffee. Just think about it.
Is this something we'll have in our homes potentially?
Probably it's gonna go out to convenience stores first, but
okay.
It's a platform technology, and platform technologies you can just grow and grow and grow.
It's fascinating. Another listener is saying, okay, so are you guys manufacturing in the United States? Like, how do you kind of get your hands around some of the discussions we've had this year, whether it's supply chains, whether it's a thinking about kind of developing industries here. And you guys are obviously working on a global scale, but the need for sustainability, the impact on climate, like how does that affect some of your innovation that you're doing? And obviously it sounds like, you're looking at the consumer who now wants things like directly. Maybe we want to cut out, e-commerce just got kind of a kick in the pants over the last 12 months specifically. So how do you kind of work all of that in as well?
Oh, that's what excites us. It's all about opportunity, right? Mm-hmm. And so what we do is, we have this partnership with Ernst & Young, and we've labeled our hub the EY Nottingham Spurk Innovation Hub. We bring a company and the top managers of the company in for an intense day or two session. and they just lay out their issues, they lay out their products, and then at the end of the day, we have a game plan to address these issues. And part of it is Factory 4.0. It's automation. It's the next generation of manufacturing. We don't have to go offshore. We can do it here in the United States. It doesn't, and then sustainability, I look at it as an opportunity, not as a problem. It's a big opportunity. We have some technologies we're working on right now that's going to change landfills. I think of these mountains of landfills for these products. You don't have to design products like that. You can design a circular product that you can control from cradle to grave.
Circular. That's something that I feel like I've talked with the CEO of Unilever. I've talked with the folks at Patagonia. I've talked with Chipotle, like lots of different companies. They are thinking about this in a big way.
Well, we're not thinking about it. We're doing it. We are actually we're hands-on. We have a prototyping facility better than anything I've seen in the world.
So
we can fast track it.
So, okay, so I'm thinking about our audience, smart investors, they're listening to this. So what are the trends that they should be watching out for specifically based on some of the work that you guys are doing? And I know you can't tell us everything. You've told us a lot, which is really wonderful. But what are the trends that maybe aren't getting a lot of attention that you think they have to be paying attention to? And they might be high tech, they might be low tech, but will nonetheless be disruptive.
Exactly. I mean, low tech is fine. I mean, it's whatever can factor in that pain point. For instance, I talked about home before. One of our companies is jacuzzi. So you can imagine people,
which can be better. Can I just say?
Pardon me?
Can be better.
Oh yeah. See, there's a pain point. So all of a sudden, all right. So here's the opportunity. So. People aren't going on vacation, but you can vacation in your backyard.
Right.
So you look at hot tubs, which haven't been innovative since the Reagan administration. Am I right?
Right, exactly.
And lots of pain points. I look at that as an opportunity to improve it, to make it better, and make it what you believe you want to have. And that's what's going to happen.
All right, don't judge me. This is going to maybe sound like kind of silly and quirky, but I have to say, working from home, being at home in our bubble, I live in a city environment, have a small backyard, and actually got an inflatable hot tub that actually was a really sweet thing for us to have. So it's certainly kind of some of the things that you're talking about. John, we have to run. Please come back. Love this kind of stuff. Have a safe weekend, a good weekend, and I hope we can talk real soon. Be well. John Nottingham, he's co-president of Nottingham Spurk on the phone from Cleveland. What a fun interview. What a fun conversation. Right now, someone who's always fun, always insightful, our own Kevin Cirilli. Sound On is coming up next. Where is your head on this Friday? You have a great lineup, by the way.
My head is, should I go get an inflatable hot tub for myself?
Don't judge me. It's great. I have like a little city back.
No, Carol, my friends, someone who I deeply respect and admire, no judgment whatsoever. Envy, Carol.
It was
Listen,
really
we've got a
sweet.
great show. Governors Larry Hogan joining me, as well as Governor Chris Christie. And I got to give a shout out to our indefatigable, tireless team this week, Matthew Shirley, as well as Christine Barada, because let me tell you, we've launched this nationally.
Yeah.
And it has been the three amigos. I told Rick Davis, he's got his new three amigos. He's going to join me with Jeannie Zaino, too.
What a great conversation. I have to say, everybody, part of our Washington team, have just been unbelievable this week. We could have done the coverage. I know our listeners really appreciate it, but you've been amazing, and I don't know how you do it. I don't know whether you're eating cheeseburgers left and right, drinking coffee. What are you doing?
Wawa coffee, but also, it's a meditation, right? Anybody read the Daily Stoic? Some stoicism in our lives these days. Listen, we've got nothing but gratitude. The audience deserves it. And Governor Christie, Governor Hogan, let's have a great show.
Can't wait for the conversations, kiddo. Have a good one. Kevin Cirilli with Sound On. That's coming up next. What a weekend. I can't wait to get there. I've got to say, I've got a list of people. I can't get to them. My Bloomberg Business Week team, they are amazing, and they get us through. Have a good weekend, everybody.